Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, February 17th. We are officially live after a 4-day break from the equity markets. We're here, we're live, and we are going to get started and figure out what this week has in store. The past 2 weeks of February, basically the start of February, has not been the kindest to equity investors unless you were in certain sectors that have performed relatively well. The John Deeres of the world, the Caterpillars of the world, the Walmarts of the world, the Amazons, the Metas, the Microsofts, the SaaS names have not been treated correctly. The growth stocks have obviously been getting hit pretty badly. And so this is the third week of February, the third trading week of February as well. And we're going to find out if the market has any juice in it to actually try to recover. It's a shortened week because we had Monday off yesterday for President's Day. Hopefully everyone enjoyed their Valentine's Day weekend. And now we're back. And, you know, there's a variety of themes that have been circulating all over the weekend that I think will implicate a healthy part of the price action that we're going to see today. And on top of that, I think a lot of those themes are going to be rooted in the concepts that we've been talking about for a long time. A lot of them having to do with big tech Capex, a lot of them having to do with macroeconomic fears. You had a bunch of different charts that came out over the weekend around job revisions that we kind of knew about on Tuesday and Thursday, but they started making the rounds in terms of the news wires over Saturday. And then obviously the SaaS sell-off, which we're still trying to figure out what exactly is going on. So this is gonna be one of the most important weeks, I think, of February, because it's kind of a make or break week. And when I mean make or break, I mean literally make or break. S&P 500, unfortunately, is red in the pre-markets. There's a couple of headlines around Iran in the pre-markets that I think are triggering this red. Also, futures went red last night after being green for like an hour. So I think it's kind of a continuation of that trend we saw in the futures last night. But we lost 680 on the S&P, folks. We lost 680 on the S&P, 678.7, down about 0.4%. Down 0.5% in the pre-market is a pretty big move already. You know, another 0.5%, then boom, you have a 1% red day on the S&P. We were at 697 last week. So to go from 697 now to 678, remember the Thursday lows of 2 weeks ago were 671. And that is the technical level that we've talked about for the past couple of weeks now. If we lose that 670, things get kind of ugly. I mean, who knows? Who knows if that's what we're in for today? But we got a lot to talk about, and a lot of headlines to go through to see if that ends up happening. You got gold that's down about 2%. Silver is down about 3%. The Dow is below 50,000. SanDisk down 2.4. Iren's down 2. Nebius is down 3. Rivian's down 2. Zeta's down 1. BMNR down 2. MicroStrategy down 3. Nvidia, I mean, 70 cents away from going back below 180. This thing was at 193.6 last week. So if they want to take it back to the low 170s, actually, I think it would be a really good setup going into earnings. We have Nvidia earnings in 2 weeks, which we'll talk about as well. We have some previews that came out by a bunch of banks this morning around what's going to happen with Nvidia. I like it at like 170 going into earnings. If it's at like 195 going to earnings, the chance of it falling are just greater. So that's also going to be pretty big in about 14 days. Then you have Bitcoin right there. 68,000 has failed to reclaim 70,000. Over the weekend, and you're seeing some weakness right there in the commodities and the digital commodities that we have across the entire market. Now, bond yields have come down, which is nice, maybe not for the best reason, and maybe people are just selling off stocks to get into bonds, but at some point we needed to get these yields to come down. We are almost below 4% of the 10-year. Japan also was at the lowest level since mid-January, so we'll talk more about what's happening in the credit markets, but it's at least good to see investors are buying bonds, because if they were selling stocks and selling bonds, we would have a much bigger issue. That's kind of what was happening back in April and May of 2025. At least they're buying some bonds. And so maybe those yields can start to come down as well. All right, let's get into it. Good morning, good morning, good morning. Again, thank you all for being here. It was way too long of a break. I'm excited to be back. I know everyone's still blaming my haircut for the market falling. If that's what we have to blame, then I'll take the blame for it. But yeah, I hope everyone enjoyed their weekend. And, you know, I put out a tweet yesterday that kind of triggered people. It was kind of a joke, but people did get triggered by it. But I think the reason people got triggered by it is because they feel the same. I tweeted, the stock market being closed takes away most of the purpose from my life. Now, obviously, I'm joking, okay? There's like other things that give me purpose, I think. But like, you know, there are a lot of people saying, this is so unhealthy. You have to have family, all this stuff. And I'm like, I get it. But to be honest, like the stock market being closed takes away a lot of the purpose from a lot of our lives. So I'm happy that it's back. And yeah, it's time to get back into it and see what we've got going on with the markets. All right, so Let's get into it. Lots of different headlines to get into. First of all, let's talk about two stocks that are up real quick in the pre-markets. Norwegian Cruise Lines, because an activist investor has officially taken a stake in it. I think it's a 10% stake, NCLH. So that stock is up 7.4%. And you've got the activists getting a bit more excited about what's going on in the cruise lines in particular. So you're getting some more momentum there. And you have another name that got an activist investor, which is, so NCLH was Elliott, by the way, very famous activist investor. I think they also have a stake in Salesforce, if I'm not wrong, but NCLH got that activist stake. And then you have Fiserv, which has been one of the payment platforms that got nuked pretty bad in November, 120 to 60. It's up 3.2%. Activist Jana built a stake in the payments business for Fiserv. And this hedge fund in particular has been very supportive of the CEO, Mike Lyons. And so you got two stocks that are at least getting a little bit of green because the hedge funds are getting involved. But the fact that hedge funds are starting to become a bit more activist because they see these deep value opportunities in the market shows how selective this stock market continues to be in terms of institutional investors finding names that they think are deeply undervalued instead of just going long the markets in general, like it's been for the past 3 years, which has been relatively easy, and trying to build a better stake in some of these names. So you got Norwegian, that's up 7.3, Fiserv, that's up 3.2. Are the other cruise lines up? CCL is also up. Yeah, so the other cruise lines up in sympathy with Norwegian, as that's up 7.3%. So there's some of the stocks that are moving the pre-market based on those activist stakes. Maybe decent for trades today if, you know, the activist stakes are enough to keep it pumping. I mean, they're some of the only names that are green in a sea of red. Maybe they dump when the market opens, but maybe they do have some momentum built into it. Now let's talk about the real reason the market's down in the pre. And this is what I think is the reason the market is down in the pre-market. Well, it has to do with Iran again. So the Strait of Hormuz, which controls about 20% of the global oil supply, is now partially closed as of this morning for Iran military drills. Parts of the Strait of Hormuz will close for several hours Tuesday due to security precautions, according to the news agency from Iran. The Strait is the world's most critical oil shipping choke point, linking major Gulf producers Saudi Arabia, Iran, Iraq, and the United Arab Emirates to the Gulf of Oman and the Arabian Sea. This has definitely affected oil prices to an extent. I mean, they were up a little bit more than what I'm looking at right now. WTI crude's up about 1%. The rest of them are relatively flat. I don't want to say this is actually the reason pre-markets are red. I mean, maybe this is just a generic headline that, not a generic headline, but a general headline that gets people to think, oh, bad, right? Potentially affects oil. There's some arguments about, you know, Iran is trying to do different strikes in the Strait of Hormuz. That's why they're closing it as well. And that could lead to more geopolitical tensions. Realistically, over the past 3 weeks, people thought we would strike Iran. We haven't done that. So ever since Iran agreed to not do the public hangings, Trump has kind of lessened his tone about being super aggressive to attack them. Now, maybe that changes. Maybe he's just trying to lower his tone because eventually they're going to attack. But I mean, the problem is I think this week is going to be filled with me once again saying, hey, I don't know why exactly we're red if we do go red, because there's not that one singular reason you can point to outside of a host of different reasons we'll talk about today that kind of conjoin to, I guess, get us some red momentum that we've been seeing over the past 2 weeks. We are seeing some green candles coming right there. S&P was down 0.5%. Now it's only down 0.26. We got back to 680, close to 680 on the S&P. Meta is flipping slightly green at 639. Remember, Bill Ackman has bought a stake in Meta. It's about 2%, or I think 10% of his holdings, $2 billion stake. He manages about $20 billion, and the average they have is 625. So you do have Bill Ackman that is now more deeply getting excited about Meta. Silver, that's one still red. Micron, 2% down. That's still down. Zeta recovering a little bit. Nvidia back above 181, so it was close to losing 180. Who knows, man? Maybe it's a head fake when we get into, I mean, really at 9:30, we're going to see what direction these algos want to go. But for the past 2 weeks, it's been red. I mean, I thought there was a Friday pump. Thursday, we usually get dumped. Friday, we get pumped. That's been the routine over the past couple of weeks. We hit 686 from 679 on Friday. So I was like, oh, we pumped. By the end of the day, I didn't do the market close, but when I looked at it later, it was 679 or 680. We closed 681. We closed it. So we lost the entire pump. So it's just been one of those things where you think you get a pump and then boom, towards the end of the day, the market just takes it back down, which is not the best to see. Speaking of the super investors, by the way, these are the top 10 buys out of the 82 super investors that we track. 44 of them have been disclosed so far. We should be getting the rest of them soon, either today or tomorrow, to be honest. And as you can see right here, the top 10 companies that have been bought: Visa, Google, Microsoft, Amazon, Meta, TSM, Berkshire Hathaway, Apple, I was looking at the wrong one. Here we go. Microsoft, Amazon, Meta, Texas Instruments, Google, Visa, Fiserv, Uber, TSM, and LPLA. So it's big tech. Big tech, semis, some payments. I mean, that's what you're essentially seeing is getting a little bit more momentum from the super investors as well. And I guess we'll see if that continues to play out or, if some of this ends up getting a bit reversed. We do have ADP payrolls. Let me pull that up as well. ADP, let's pull this up right here. I think we got a beat on private payrolls. This one is not that important of a jobs data report today. Yeah, Fiserv's is up there as well. Fiserv, again, it just feels like it came into deep value territory, which is why the street got excited about it. 10,250 jobs, the highest since last November on ADP private payrolls. We got that about 10 minutes ago. ADP weekly employment, this is the 4-week average through the end of January, up to 10,250. I think the street was expected about 7,500. So you do have a little bit of a beat there. I mean, I don't know if that is going to make that much of a difference to the market. Remember, the jobs report that we got last week, so let's get into the jobs data, was really good. We had 130,000 jobs versus 70,000 expected. So the market was super excited because it was like, oh my goodness, there were, so many more jobs than we thought. But then we had the revisions. And unfortunately, with the revisions, it's hard to trust the actual jobs numbers if you know they're going to be revised. And I think that's why the street has been a little bit more skeptical about the jobs numbers. This is the annoying part. 1 million jobs, about 1.029 million jobs were revised to the downside in 2025. This was the highest in 20 years. Remember, 2024 was 818,000 jobs revised to the downside. 2023 was 306,000. 2025 was 1.029 million. Since 2019, 2.5 million jobs have been erased from the official data, which really makes it seem like a joke every time we even get so excited about non-farm payrolls, because if a year later it's going to be revised down, then what are we doing here? How do we actually track the amount of jobs that are there? So U.S. labor market data is in a very weird territory. Now, you would think based on this revision that we would get a higher percentage of a rate cut, and we're at 9% for March. This was at 5% a couple of days ago. Before that 5%, it was at 18%. So it went all the way down to 5%, and now it's back to basically 10%. I mean, maybe we end up getting that rate cut, but it doesn't seem like this Federal Reserve is that interested in giving us the rate cut. So we'll see how this ends up playing out. But job revisions are going down. And that jobs data is actually anecdotal with something that came out from Bloomberg today. Nearly 500,000 Americans are now working 2 full-time jobs, making it increasingly common. So you have some analysis there from Bloomberg saying, based on the surveys that we're doing, we're seeing more and more Americans are working 2 full-time jobs and trying to essentially live to try to work to get by, living not only paycheck to paycheck, but literally each paycheck being the basis for them to even have a chance to survive. That kind of goes against that affordability narrative that Trump has been trying to tweak in a more meaningful way. And that actually leads to a headline I saw this morning as well, that based on a lot of new surveys, Republicans now have the lowest chance to win in the midterms, still at 60% odds, which is better than 50-50, which is kind of all you need in the political atmosphere, but you're at 60%. And the question now becomes, hey, is the affordability stuff, is the ICE stuff, is all these things that people are upset about, is this going to be enough to have a upset in Congress where the Democrats take the majority in the House and the Senate? Right now, obviously, the Republicans control it. 60% lows as a poly market for the Republicans to win. Affordability continuing to be one of the core arguments. Oh, eToro had earnings today. Let's look at that real quick, and then we'll get into the big tech Capex stuff that I think has been dominating most of the headlines. eToro, is the stock up? eToro, the stock, wow, 17%. Yeah, the stock is indeed green. Let me pull up those numbers. GAAP net income looks like increased about 16% year over year. Revenue should be up even more than that. Let me know in the chat if you own eToro. I think Tess owns it. She's the only one I know from the chat who owns it. Put it else in the chat if you own this one. Tanner does not own it. Tanner got bullish on it, but I don't think he ever bought a position. I did remember watching his video when he put it out like a month ago. I mean, this is good to see. You're seeing momentum in the brokerage space, even with some of these companies that are a bit smaller right here. Yeah, revenue's up 184% year over year, and GAAP net income is up about 14% year over year. Yeah, a couple of you guys own it. A couple of you guys. All right, congrats. There you go. eToro adjusted EPS was 71 cents. Revenue was 3.8 billion for the fiscal year, and the net income 68.7 million. That's what you have for eToro. They have about 20 billion in AUM, 18.5 billion in assets under management. All right, that's actually one of the rare times we've seen a growth stock get some momentum after a really good earnings. 16%. That one might be for the traders out there. If that momentum keeps building higher, maybe that has some juice in it to trade. Now, again, 16% is a big move in the pre-market already, so maybe the move already happened. But when the market opens, maybe that one has a little bit more excitement. Also, the market cap on this is 2.3 billion, so it's really not a large company. Iran's foreign minister, Iran and the U.S. have cleared a path to move forward. This does not mean that we will reach an agreement soon, but the path has started. Date of next round of U.S. talks has not yet been decided. That's a good headline. S&P still down below 680, but the Iranian foreign minister putting out statements saying Iran and the U.S. have cleared a path to move forward. This does not mean that we will reach an agreement soon, but the path has started. The biggest thing that Rubio wants the Iranians to give up is the nuclear ambitions. Now, Iran has been pretty explicit that we are not going to give up any ambitions to create nuclear weapons. But if the talks have at least created a path to start, then that's good, even if both sides are not getting exactly what they want. By the way, silver and gold, look at that. Did that just happen, silver? I think it was down 2%. I think it fell just another 3% right there. Gold as well, below 4,900. That's likely based on that Iranian foreign minister statement, potentially indicating less geopolitical risk if they're actually diplomatically moving forward. And there you go. That's where gold and silver tend to get sold off. S&P now getting right back above 680. Okay, big tech Capex. So I think the biggest conversation that happened over the weekend around the broader AI ecosystem was this idea around where Capex is going and how Capex is ultimately being spent. We spent some time talking about it yesterday. I'm sure people have probably seen a lot more conversations about what's going on, but this is the chart I showed yesterday. Credit default swaps on tech, which is essentially a bearish way to bet against the debt increases of the big tech companies, is at an all-time high. $10 billion. Oracle leads it with $6 billion. Then you have Amazon at $1.7 billion, Google at about $895 million. I mean, people actually buying default swaps, credit default swaps on big tech is kind of, it's funny, but it's like as a form of hedging, it's like, okay, that makes sense, right? A hedge is a hedge. It's supposed to go to zero, but it's also like, dude, these are the best companies in the world. And you have investors that are now getting bearish on the debt that they are issuing to be able to build out all these data centers, which leads to the broader question that I think everyone has been talking about for the past couple of weeks, which is that, is the Capex actually something good? As you can see right here in this chart, the guidance for Google, Meta, and Amazon's Capex was 35% above what the street expected. This is why Amazon, unfortunately, is below $200. Street wanted 140 billion. Amazon said we're going to do 200 billion in Capex. In fact, funny chart on Amazon. I mean, this is kind of crazy. Amazon is down 10 days in a row. This is the longest losing streak in history. The last time this happened in 1997, you have to go back to 97. I was born in 1997. I mean, that's how crazy it is, or that's how crazy long it has been since Amazon has actually had 10 losing days in a row. The Amazon then bounced 10% 2 days later. So maybe in the next 2 days, which would put us at around Thursday, we get a 10%, not even a 10% bounce, but like some type of a bounce on Amazon to get a rebound. But this is all because of increased Capex. This is all because of increased Capex as the sort of fundamental reason why Amazon's got hit. AWS is reaccelerating. Operating margins are at an all-time high on AWS. The core business itself is growing. The fact that revenue is still growing double digits year over year is incredible. Robotics is a massive tailwind. But because of this number right here, guidance being 35% higher than what the street expected, people are upset at Amazon. So it goes to a broader question then, right? If people are upset about Capex and people are upset about big tech spending as much money as they're spending, does that mean that big tech is just not going to be a winner this year? And quite frankly, I think the jury's still out on this question. There is a world in which big tech is not going to be a winner this year, and it's a breather year. We've had 3 years of bull market. The fourth year kind of, allows people to chill out a little bit, and we don't see that massive 20% return on the NASDAQ as some people think. But then when you start walking down that line of logic and say, okay, maybe that's how it plays out, you then look at where the money is going, because the money has to go somewhere. The money always has to go somewhere in order for capital to be allocated. And when you see where the money is going, it's going to John Deere with negative revenue growth. That's up 30% this year at 32 times earnings. You're paying 32 times earnings for a company that's not growing top line revenue. Walmart's at 45 times. Costco's at 50 times. I know people have been hearing these arguments over and over again that these value names are trading at what it is tech multiples with way worse margins and way less growth. But when you see the money going into these names, once again, I think it brings up a question about, hey, maybe the bubble is not in tech. Maybe it's not in Nvidia trading at 25 times, which, by the way, Citibank, they put out a new note this morning. They said, hey, buy the crap out of Nvidia. We think it's going to 270, and we think they're going to massively beat on their earnings. This is the report right here. But maybe the bubble is not in Meta trading at 18 times or Microsoft trading at 22 times. Maybe it's in Walmart trading at 45 times. Now, again, the argument is, well, Walmart's more predictable. It's not going to go out of business. Everyone shops at Walmart, yada, yada. I don't think Meta's going out of business. I don't think Amazon's going out of business. Nvidia, maybe AI is all fake and it goes out of business. I can understand the skepticism on Nvidia, even though I think it's ill-founded. But for the other companies, Microsoft, Meta, Amazon, these are global economies that are built inside of companies that have an impact on every one of our lives. It's hard to imagine that they are unpredictable in terms of their cash flows. And so I think that means the correlation around big tech is that there might be a rotation out of value into big tech going into the next couple months. Is this the end of Max 7? I don't think so. I think these companies are still too important and have eventually too much earnings growth to be ignored outside of Tesla, which eventually it will have more earnings growth. But it's hard to say this is the end of Max 7 and Walmart, John Deere, and Costco are going to lead the next decade. Like, that just sounds absurd. Maybe they'll lead the next year. Maybe they'll lead the next couple months. But to lead the next decade means that I think these names are going to be incredibly attractive. We'll look back in a couple of years, Amazon at 199, and hopefully think, man, the street actually got upset that they were spending Capex to grow, which is, ultimately what investors need them to do. So Citi thinks that Nvidia is going to put up $67 billion of revenue versus $65 billion expected, and then they're going to guide for $73 billion in April, which would be Q1 of 26 versus $71.6 billion expected. They think margins are still going to be 75%, and they still have a 270 price target. You also had a rumor, this is not confirmed, but a rumor this morning that said Vera Rubin is ahead of schedule and that Nvidia is going to be shipping them even faster than expected. Again, that's not confirmed, but that also could be some good news if that is confirmed for Nvidia to at least have some more good news going into the end of the month as they report earnings. By the way, Saylor continues to buy Bitcoin. I don't know how the hell this guy gets money every week to buy Bitcoin, but he somehow gets money. 2,486 Bitcoin, 168 million at 67,000. Their average is now 76. They have 717,000 Bitcoin. Bitcoin obviously is well below their average as of now, but it only needs to go up about 8,000, which we've seen happen with Bitcoin within a couple hours for them to break even. And strategy continues to buy the dip. 2,486 BTC they bought over the weekend. All right, some other headlines. Market is currently pricing in 3 to 3.25% by the end of the year when it comes to rate cuts. So they're pricing in about 2 cuts. Some analysts are pricing 3 cuts. Goolsbee, we got some Fed speak. He just said, consider a 3% policy rate a loose estimate of neutral. That's basically him trying to say that 2% target is BS. He wants to say the 2% target is BS. They all want to say that. They can't say it because for the past 5 years, they've been saying 2% is not BS. But I mean, that quote is pretty clearly trying to say it's BS. So if Kevin Warsh comes in and says, hey, maybe 2% is BS, or we have a better chance of getting to 2% if we actually cut rates and open up the economy, maybe we end up getting more rate cuts, which is another reason to not be fully bearish this year, because we still have a Fed chair that's going to be coming in to definitely give us a lot more cuts than not. All right, couple other things that we have going on. We talked about the Iran headlines. We talked about Capex. This chart I showed last night, I thought it was really important. February sucks, especially the end of February. This is called the banana peel part of February from 1950 to 2025. This is a amalgamated return for the S&P 500 index. You can see from the 15th to the 29th, it sucks. It's just not good. So this is another reason why the past couple of weeks of February and the next couple of weeks of February might not be the best. It's just tends to not be the best from the past 75 years of data. And so maybe it's something we have to go through. Honestly, if we get another 2-3% down on the S&P, maybe that's the Band-Aid we have to rip off before we can start going higher and just get it over with. Given January was so good in certain high beta parts of the market outside of the S&P. And maybe if we get it over with, we can move forward from there. So time will tell, but hopefully it's not the worst thing in the world going into the end of February. This chart I also thought was really interesting. Take a look at this Capex chart on the conversation of Capex. Amazon's Capex up 42% year over year, Microsoft 89%, Alphabet 95%, Meta 50%. Apple is negative 19% year over year in terms of their Capex spend. One argument could be made that Apple is not spending on CapEx. They're going to license Gemini, and that's going to increase their hardware sales by roughly orders of magnitude of what Gemini, Google is even spending on CapEx, because they have the distribution, they have the users, they have the product moat, and that they don't need to spend the intense amount on training the models to be able to have some type of proprietary, I guess, suite of features that make Apple products even better. Now, one could definitely make the argument that if Apple had just invested, $200 billion over the past couple of years making their own model, they would already have an AI Siri. They would already have all these AI agentic assistants that would be immediately interacting with the ecosystem of Apple users, which is about 2 billion of them, and Apple stock would be even way higher than it is. Maybe they'd be growing better than 10% a year, but they didn't. And so now I think the street is either going to reward them on being able to meaningfully implement some of the models from the CapEx that has been spent from the other hyperscalers and get that distribution, or the street's going to take them down. In fact, the reason why Apple had its worst day on Thursday since April of 2025 is because of reports that Siri was being delayed once again. Siri has been delayed for almost 3 years at this point, the AI version of Siri. Apple is going to have an event on March 4th talking about their new Mac products, which is cool. But at the end of the day, if they don't get AI products out into the world, hardware sales just might not have a chance to continue growing like they did. Now, they had a really good quarter because I think everyone needed to upgrade their iPhone, and that's why iPhone 17 did really well in Q4. But now you got to give people a reason to buy. And maybe it's going to be more rooted in AI. Palo Alto Networks announces intent to acquire Koi to secure the agentic endpoint. Dude, the cybersecurity consolidation in terms of acquisitions has been quite incredible to see. Palo Alto down about 0.37. Dan Ives reiterated that he is overweight the cybersecurity names today. As he said, they are the least likely SaaS names to be disrupted by AI. I agree. It's really hard, I think, for AI to destroy CrowdStrike. I don't think you vibe code endpoint security in a meaningful way. But you got Palo Alto looking to get more into these acquisitions. We saw Google that bought Wiz. Palo Alto made another acquisition, I think for it's like 10 billion last year as well. So these cybersecurity names continue to consolidate. Let's do the green or red poll in the chat. Let's see what people are thinking. I don't know if we're going green or red today. I feel like this would be a classic day to flip green, given we're red in the pre-market and we've already had basically 2 weeks of red at this point. But I mean, every time we've flipped green, the market just takes it back. And I don't really know if sentiment has necessarily changed. That's the other thing. Sentiment has not. If you've scrolled Twitter over the weekend, sentiment is bad, bro. Sentiment is bad. Like, it's not good. It's pretty ugly sentiment across the entire board. In fact, I showed this chart last night, but the tech sector has its largest short since 2016. So tech stocks XLK, which is the tech ETF, part of the S&P, is at its largest short float in over a decade. And, as a result of seeing that much short interest, to me, I think it's actually kind of bullish, because it's like, okay, are we really going to collapse when everyone is prepared for it? It just seems a bit unlikely. But the sentiment is showing up in the data as well. As you can see right there, short interest is at the highest level on XLK. Now, at the same time, although short interest is at the highest level on the XLK in a decade, retail flows, this came out from Goldman on Thursday, is kind of at an all-time high. It was from JP Morgan. Strongest equity retail flows on record. As you can see, 2020, it was up there. 2026, it is really up there. So retail is buying the dip, because retail has learned that buying the dip has worked in a bull market. Logically, if it's a bull market, you buy the dip. Question becomes, is it still a bull market? And I think that is a deeper question a lot of people have concerns about. But when you look at the earnings, when you look at the Fed policy, and when you look at what stocks are getting a bid, although it might be a bull market for Walmart and Verizon right now, I wonder by the end of the year, I really wonder, do Walmart and Verizon end up being the biggest winners compared to the Nvidias and Metas of the world? And maybe they do. But I think right now retail is definitely calling BS on that, and that's why they're buying more the dip than not. Yes, we do have Nvidia on next Wednesday. The VIX continues to also, the VIX we've had a decent amount of days with the VIX above 20. I think the VIX closed at 22 on Friday. So if that VIX does not take a little bit of a beating today, you might also see some more pain in the equity market as well. ServiceNow just got hit with a candle, up 4.3. What did they say? ServiceNow, 4.3%. They had to say something because this is a SaaS name. There's no way the street's buying it up for no reason. Figma earnings is tomorrow as well. Yep, we'll talk about that. ServiceNow, what's the headline here? Wow, Bill McDermott plans to buy 3 million of shares. Look at that. Look at that. That is what you want to see when your stock is getting hit hard. You want the CEO to buy some damn stock. Bill McDermott plans $3 million share purchase. Snowflake is also down. CRM is slightly up, and Adobe slightly up. IGV software ETF, which by the way had 11 billion of volume on Friday. So people are definitely buying up software, or at least they're taking the chance on software. IGV, that's one still flat. So ServiceNow is the only one that's getting the benefit of that headline right there. 4% up as the CEO announces their intent to purchase $3 million worth of shares. ServiceNow CEO and CFO also terminate their stock trading plan. Wow. So they're getting rid of all their pre-saled or pre-planned sells, which is good. And they're now planning to buy. Oh, sorry, it's not 3 million shares. It's not $3 million. It's 3 million shares. Dude, that's $300 million. Because the stock is at 100 times 3 million. Oh, that's a way bigger deal. That's not maybe I'm getting that wrong. Is that $3 million or 3 million shares? 3 million shares, it's a little different if it's 3 million shares. Hold on, let's see. Either I'm reading this wrong or... No, it's $3 million. $3 million. Okay, yeah. I don't even know if Bill McDermott has 300 million. I mean, he probably does, but okay. $3 million. $3 million. Dude, imagine he said, yeah, I'm going to buy three. How much is the market cap service now? It's 112 billion. That would be a decent chunk for an insider. 300 million is crazy. Okay, so they're canceling their sales, which is bullish, and they're buying 3 million worth of stock. We'll see how the market reacts to that, but there you go. ServiceNow getting some pump off of that headline. S&P reclaiming 680 as well in the pre-market. $3 million wouldn't move the stock. Yeah, 3 million wouldn't move the stock. 300 million would, but 3 million wouldn't. But the intent to actually buy in the midst of the sell-off, I guess, is what's getting the street excited, and that's why you got ServiceNow getting some momentum. Okay, let's talk about the Palantir stuff real quick, because obviously this weekend was also really big for Palantir. I spent some time last night on the Future Show talking about it, so I'm not going to talk too much about it. But obviously Michael Burry kind of went ham over the weekend discussing all of his bear theses about Palantir. And, you know, it's just tweet after tweet after tweet about why Palantir is bad. He's talking about articles from 2017 from BuzzFeed talking about why Palantir is bad, why they don't have a moat, et cetera, et cetera. Look, my take on it is very simple. If Palantir is to go down, I think the market's going to go down. I don't think Palantir is going to go down independent of the market. I took a look at Palantir's earnings again over the weekend just to refresh on the numbers. This was one of the best earnings I've ever seen in history. I mean, this really was. And the guide for 75% growth in Q1, which they're going to beat again, is just exceptional. They're doing this with less than 4,000 employees. I mean, when I try to, like, my head hurts when I try to think how they're putting up these numbers, how they're getting these contracts, how they're actually expanding net dollar retention and margins, and they have less than 4,000 employees. Like, to be able to close that many deals, to be able to get that much retention and not have any meaningful sales force and just have engineers plugging away at the problem is just exceptional. Having said that, the stock trades at 70 times sales. So there is a world where Palantir goes down based on the valuation, which I think Burry has his full right to be able to talk about the valuation. I think his actual claims that Palantir is fake, scam, et cetera, that stuff is going a bit too far. I think that really doesn't understand the company. But if Palantir goes down, I think Rocket Lab, Hood, Tesla, Nvidia, they're all going down with it. Like, I personally don't see the world where Palantir is 50 and Nvidia is making new all-time highs. I just don't see that. I think we are too much in an algorithmically controlled market environment where that would be the case. So was the Palantir news hack real? No. So then you had this other Twitter account that has like 1 million followers, Kim something, posted that Palantir got hacked and now they're trying to take over the world or something. A lot of this stuff is just pure clickbait because people know it's a heavy topic right now. People know that Michael Burry has a big influence, and so he's making people get excited about what's going on with Palantir. And you have a lot of fake news and just like misinformation that's being propagated around Palantir. Having said that, that's not good for the stock because you just have a lot of people that are thinking Palantir is the most evil company in the world. And then you have Burry with his massive influence telling people the stocks can go to 50. I would not be surprised if we see weakness in Palantir just based off the sentiment that I saw over the weekend on X with people getting upset about the broader market. Palantir is down 30% while the market is down 2%. Yes, but I don't think comparing growth stocks to the market makes any sense. I really don't, because a lot of growth stocks are down 30% or more compared to the S&P. I mean, Microsoft's not down 30%, but Microsoft's down 17% to start the year. The S&P is barely up 1%. So I think, when you put these growth stocks in a bucket and talk about how much they're down relative to the S&P, comparing them to the S&P doesn't make sense because the S&P has obviously rotated. Financials, healthcare, utilities, defensives, industrials, those are what are propped up the market. Tech has not, but thankfully the market has been able to hold on because of the broadening of depth, which is kind of like it's a good thing for that much breadth to broaden. But it definitely means that these tech stocks are going to get hit. So, my take on it is very simple. I've always said that Palantir is expensive. In fact, when it got to 40, 50 bucks, I've been saying it's expensive because it is, like, objectively, it's a name that trades at a very premium valuation, but there are reasons why it gets that premium valuation. Does that premium valuation go away? S&P is not up year to date anymore. I forgot, given the decline we had last week. I don't think it gives up its premium valuation unless the whole market gives up its previous valuation. Like, if Palantir gives up a massive level of valuation, irrespective of like messing up on earnings, which I just don't expect them to do because they've been crushing earnings, then I think so will Tesla, so will Nvidia, so will Hood, so will Rocket Lab. So if Burry's going to be right, it's going to be right about the entire market. Because the only way he's right about Palantir is if they mess up on earnings so badly and they miss so badly in the streets, like, oh my goodness, we were paying so much for something that is barely growing, but that's not what they guided for. That's not what we saw in earnings. That's not what we see when we look at the financials. Even though the valuation is aggressive compared to the financials, I don't think valuations just collapse. I mean, Amazon had an aggressive valuation compared to its financials for years before they grew into it. And they never really grew out of it. Like, the fact that Amazon is the cheapest it's ever been on an EV to EBITDA basis in the past, 17 years, compared to when it was massively expensive back in 2014, and investors were still willing to pay that premium and they were losing money every year, and now they're making so much money and investors are getting scared, just shows the paradigm shift around when growth slows down, even though Amazon's reaccelerating growth. But that is why I don't think Palantir loses the valuation as easily. But time will tell. Time will tell, and we're going to see. Yeah, you can see right there from Cactus, Mag 7 year to date, it's ugly. It's really, really ugly. And that's why I think it's hard to compare it just to the S&P, because all these stocks have been getting hit pretty bad. Carp and Emit have the same barber. Yeah, you had a lot of Carp quotes clips go viral over the weekend. I mean, sentiment's bad about Palantir. I'm just gonna be honest. Sentiment is bad. And I'm saying that objectively. As much as I love Palantir and as much as I do believe the company is not the worst company in the world and deserves a premium for what they're doing, like, sentiment's bad. And I don't know if that's gonna affect the stock, but we're gonna have to find out. And if it does, then we're gonna have to deal with it. But I really do think a lot of this is more controlled in the algos of the macro. And if Palantir gets hit, a lot of companies are going to get hit with it. Robinhood Ventures is launching today. So this went under the radar on Friday. RVI, Robinhood, is doing a live roadshow at 1 p.m. Eastern. This will be in your Robinhood app. What is a roadshow? If you were to invest in a private company that's going public, you would be part of a roadshow. So let's say you're in JP Morgan. Let's say Anthropic wants to go public. Anthropic would literally fly to your headquarters and they would do a presentation explaining why you should invest in their IPO. And then JP Morgan, based on looking at the data, would make the decision on if they want to underwrite the IPO or not. Robinhood Ventures Fund is a new fund started by Robinhood where they're going to be investing in private companies, and they're going to be doing a roadshow for retail investors to decide if they want to invest in the fund itself. I think the first name that they're going to be showing off in this roadshow today is Stripe. From my understanding, the first name they're going to be showing off today is Stripe in this roadshow. Now, I love Robinhood. I think it's cool. Let me just be the first one to say, I'm not investing in this. I'm also not investing in any of the IPOs this year. I think all of them are grossly overvalued. I think all of them are looking for exit liquidity. I think none of them have the financials to justify anything that they're saying in terms of valuations. I think some of them might pump because, if Mag 7 are down, maybe Stripe's going to go up and people are going to go into it. But I'm not excited for the private markets this year. I'm really not. Like, especially these IPOs. SpaceX feels like exit liquidity. Stripe feels like exit liquidity. Anthropic feels like exit liquidity. They're growing. They're phenomenal companies. But in this market environment, if Nvidia is not catching a bid at 25 times earnings, if Anthropic was a public stock, it'd be down 30% this year. It'd be, for all the growth it's putting up, if Palantir is down 30% this year, it's hard to imagine that a lot of these other private names wouldn't be down that much. So my perspective is, if you're going to bet on these, you have to bet knowing you are paying a premium valuation. And, it's the job of the Stripe CEO to justify why you're paying that valuation because he's the CEO and he wants to take his company public. But it's also the job of the investor to understand if I'm getting a good deal. And I just don't think any of these are really good deals. I think there's lots of better deals in the public markets. So I will not be participating in the private IPOs. I think they might do well. But when you look at the numbers, it's like Stripe getting pitched at 140 billion, it starts to look kind of stupid. It's like, hold on there. You're a payments platform, buddy. Like you're cool, you're big, you're growing, but 140 billion when there's other companies out there that are trading at 20 billion or less and growing faster is a bit ridiculous. So I think time will tell. But yeah, I will not be in those private IPOs. Amid Hood's 4Ps in the 30s, Nvidia's in the mid 20s. Do you think they have a premium anymore? No. So a lot of these stocks have already gotten corrected and they don't have a massive premium anymore. Hood, look, the reason Hood might have a premium is if you don't believe in their growth for their forward PE, which is where the forward PE does not go to the 30s. It starts to go to like the 50s. But if you believe in their growth, then yeah, the premium has been eliminated. But Hood is also down, basically 50% from the highs. Some of these names still have a premium associated with them, like a Rocket Lab and a Palantir, even though they're down 20% year to date. And the question is, do they go down to Hood levels, which is like 50% down? I don't know from the top. At that point, Palantir would be at 100. 200 was basically the highest for Palantir. Rocket Lab would have to go to 50. Rocket Lab basically got to 100. Right now it's at 67. Tesla definitely trades at a premium that would have to go to 200. So I just don't think that happens. I think Hood uniquely got hit because of the crypto volatility, and there's nothing you can do about that because it's pegged with crypto. But still, I think there are premium valuations out there, but there are also very cheap valuations. The question becomes, where does the market rotate to? All right, folks, we got a minute. Thank you, everybody, for being here. Hopefully, everyone had a good weekend. Let's see what ends up happening to the equity markets. We had 2 weeks of pretty ugly momentum. Cloudflare and MasterCard just announced a strategic partnership. All right, we have that headline coming in right here. I'm sure we'll have a lot more headlines. A couple of the things I didn't get to. We'll see what we get when the market opens. 10 years are down. Japanese 20-year bonds are down. So bond yields coming down is good. Bitcoin is flat. S&P is basically down 0.5% or about 0.25%. And I guess in the next 20 minutes or 20 seconds, we're going to see if the market comes in and tries to buy up SaaS, try to buy up big tech, or if we continue going down. But this will be the last week we have until Nvidia. And after that, we're going to see how the market ultimately wants to interpret what's going on here. All right, Tuesday, February 17th, 9:30 a.m. Happy to be back. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it and see what we've got. Robinhood down 2% on the open. Palantir down 2.3 on the open. IGV once again down 1% on the open. ServiceNow CEO plans to buy $3 million worth of shares. It was up 4%. Now it's up 2.4. You're getting a red candle right there. So Street's not really loving the news enough to give it a pump back up to that 112 level. But stock is still up about 2%. S&P recovers most of what it lost in the pre-market. Flipping green right there, 680.60. We were at 677. Let's see if that can continue with the momentum to the upside. eToro, that's still up 16%. Meta goes down 1%. Nasty red candle on Meta. That one's down $6 on the open. Norwegian Cruise Lines, that's up 7%. Elliott took an activist investor stake. Fiserv, that's up 3%. They got another activist stake as well. CCL, that's moving with Norwegian, that's up 2.83. The Qs are down 1%. What's stopping the Qs from going up? It is Nvidia, that's down 0.5%. Tesla is down. Wow, Tesla 408. This is the lowest we've seen it, I think, in the past 2 weeks. I mean, last Thursday was at, the Thursday before that was at 395, but 408 going below 410. That's down 2% on Tessie. Where's Google? Google is, wow, Google. We hit 298 pre-markets. I didn't even see that. It's at 300 right there, holding on for dear life. Last Thursday, I don't think we hit below 300. There you go, 300 on the Goog. Shopify is up 1%. That fell last week from 145 to 107 after their earnings. XLE continues to do well. That's the energy sector. That's up 1%. Enphase is up 0.5%. Exxon's up a little bit. Dell is down 1%. Copper, or Capex, copper ETF, that's down 3.7 as silver continues to get hit. SLV, that's down 3% as well. Robinhood, green candle right there, but we're still red. Nope, now we flipped green. 76 on Hood. Where is Rocket Lab? Rocket Lab 66.70. That's down 1%. Palantir A little bit of a green candle from the absolute lows, 129.25, getting back above 130 would be very nice. Nebius is 97.68. Nebius had a great earnings last week. It tanked on earnings and then it kind of recovered. And now it's actually, kind of holding on to the momentum that it, I think, deserved after earnings. You got Nebius right there at 97. Grabby Grab at 421. That one also got hit on Thursday or Friday last week. That one's now up about 2%. Nvidia trying to flip green right here at 182. That would be nice. BMNR is down 2.5. Ethereum is at 1987. That's just below 2000. HIMS was up 2% in the pre-market. Now it's down, or now it's up about 0.5%. HIMS has kind of been stuck in that $16 range. Wow, Caterpillar's red and Deere is red. Is Walmart red as well? Walmart is flat. So some of those value names are getting some red candles. Amazon still below 200 at 199, but trying to break out above that. I mean, it looks like growth is trying. Hood just went red again, but I don't know if there's enough juice to get it going forward. Even ServiceNow can't really get a meaningful pump after the insider buy. Apple goes green. S&P flat, basically 680.7. Meta got hit. Meta, are we still below 635? 637 on Meta, so that one's getting a green candle. It hit 631. Disney's up. Oh, Netflix. We didn't get to talk about Netflix, but dude, the Netflix story is getting crazy. So Paramount is reopening negotiations with Warner Brothers. Netflix gave them permission to do so. Netflix granted a 7-day waiver permitting Warner Brothers to engage with Paramount. And Paramount representatives are informing Warner Brothers they would agree to pay $31 a share, which would be a little bit more than what Netflix is offering. So, Warner Brothers has a fiduciary duty to look at the offer. Here's the thing for Netflix. They get a breakup fee if Warner Brothers leaves the deal. I think it's a $2.8 billion breakup fee. Netflix only does, from my understanding, about $8.5 to $9 billion of profit per year. For them to get basically a $3 billion breakup fee, that's almost 30% of their profits, net income, coming in the breakup fee. So it's not the worst thing in the world for Netflix to not get Warner Brothers because they get all this money coming in. And I think immediately the stock would jump, right? Because they're not paying hundreds of billions of dollars and they're getting single-digit billions back to help. That would go directly to the bottom line. But they're missing out on Harry Potter. They're missing out on Warner Brothers' suite of products. They're missing out on Game of Thrones. Like, they're missing out on all the content that Netflix promised shareholders they would be able to acquire to be able to grow the business. Amazon back above 200. And so net, I do think the Warner Brothers deal is important for Netflix to make happen. But if it didn't, they would get $3 billion, which would be nice. Look at Nvidia trying to break 183. Trying to break 183. Hood just went green again, 76.18. It's going back and forth. MicroStrategy, that's down to Coinbase. They had a decent earnings, but obviously Bitcoin has been taking a hit, so Coinbase has been taking a hit. That's down. AppLovin should be at 450 minimum. This thing is at 386. Again, I'm not buying it because I just don't know enough about the business, but when you look at the pure growth metrics, this stock feels a bit too cheap for the growth that they're putting up. 385, especially after the short report came out and said that the short is not as accurate as they thought it was. But the stock got hit 25% on earnings, 25% on 84% net income growth. I mean, it's quite incredible to see how the market is so scared of these SaaS names. Reddit right there, that goes green. That's up 1.3%. SoFi is down 0.5%. Elf is up 3%. Elf getting a little bit of love today. Is Ulta up? Ulta is at 2.3. What about Estee Lauder? Is that up today? That's also up 1.9. So you got the makeup stocks having some energy in them and going green. Quantum goes down again. D-Wave's down 3. Rigetti's down 0.5. Fluence Energy, the other energy stocks, are getting hit. That's down another 4%. That was down almost 20% over the past 2 weeks. Bloom Energy also down 3.84. This thing was pushing 170 last week. Now it's at 134. Netflix still up a little bit. Walmart just went red, along with Caterpillar and John Deere. Nvidia just went green. Okay. Nvidia goes green. Walmart and the value ones go red. Palantir 130. It's really fighting to hold on to its green. Apple goes green. S&P goes green. Okay, seeing a little bit of momentum maybe start to flip from tech. The Qs, are they close to going green? The Qs are very close to going green. The Qs are 30 cents away from going green. RPI is up 40%. What is RPI? Rapid Micro Biosystems. Okay. $140 million market cap. Makes sense that it's up a lot. Probably had some good drug data. The problem is it's really hard to find those names before the drug data comes out. But that one is green. Amazon back above 200. That is nice. Google, are we below 300? Nope. Even Google, look at that. Look at that candle on Google, 305. Touch 298 for a hot second. Even Meta goes green. Wow. So tech flipping green at 9:37, 7 minutes into the market open. And your value name's going down. XLE is still up based on energy. Nope. XLE is down. Well, hold on. Let's look at the other ETFs. Wow. Look at that. Financials are up. Tech is about to go up. Materials, discretionary, staples, industrials, energy, all down. Real estate is barely up. If tech goes green, maybe we have a full-on reversal today. Now, it's hard to say. It's only been 10 minutes, but you are seeing some signs of life in that as well. Grab getting a little bit of a move as well. That's up 3%, 423. Warner Brothers, that's up 2.8. How about Ondas? Your drone stocks are flat on the day. Ondas at 918. And then Red Cat, 1112. That's also up. Okay, so seeing some of that excitement start to come a little bit more into tech. We had some headlines on Anthropic over the weekend that people might have missed, but well, the first major headline is Anthropic was upset that their software was used in capturing Maduro. So it came out from the Wall Street Journal that Anthropic embedded inside of Palantir. Again, Palantir is kind of like the foundational software that creates the atmosphere for the LLMs to exist in, was being used to capture Maduro. I don't think people had too many doubts that Palantir was using that, but Anthropic's name got thrown into that over the weekend, and Anthropic called up the Department of War. They called up Pete Hegseth, and they were like, hey, we don't want our shit to be used and stuff like this. And then Pete Hegseth is now getting ready to classify Anthropic as a supply chain risk for the entire government because they're not complying with what the government wants to do with their AI models. Now, Anthropic has every right to say, hey, we don't want our stuff to be used like this. But that means the Department of War also has the right to say, all right, we're going to use somebody else. So that means some of that revenue, Nvidia hitting 183 right there, getting some momentum, would probably be cut for Anthropic. They have a $200 million contract right now with the DOW. Maybe that goes away. And I wonder who steps up to take it. I think that's a bigger question. Is it OpenAI? Is it Grok? Is it Gemini? I mean, the headline probably wouldn't be pretty for all three of them because they might be concerned about what the public would say. I think Grok might be the one to go for it. But then again, Elon also doesn't really want Optimus to be involved with the military. So I don't know if Grok would easily adopt it. I don't know if Sam Altman would either, and I don't know if Sundar would either. So it's going to be interesting to see who the Department of War goes with in terms of having a custom LLM that allows them to do what they want to do. Palantir right there, 131. Palantir's trying to go green. Nvidia, nice break above 180. This thing was almost below 180 in the pre-market. Apple going green, 1.2. S&P now holding on to an actual move above 680. eToro, congrats to anyone who's in that, 19% green. 19% green on the day. SoFi, are we finally green? SoFi, 1960. We are not green yet, but we are close. And then the VIX is down 0.5%. The VIX was at 22 on Friday. Today, it's at 2109. So it's down from Friday, even if it's slightly green on the day. At the same time, although the Anthropic CEO doesn't want to be used in the government, which again is like, why would they agree to let their model be implemented into the government a year ago? Like, did they not think that, the government would do stuff with it? So it's kind of weird that they're like getting upset about it. They should have never gave it to the government. But at the same time, the data center growth, he thinks, is still going to be exponential. And he thinks is not slowing down at all. Dario did a pretty big podcast over the weekend talking about data center growth. And is that, big tech is spending, $650 billion in Capex a year. He thinks by 2029, it's not crazy to imagine trillions of dollars of Capex being spent every year by big tech, which means Nvidia is probably going higher. By the way, Bitcoin got a nasty $1,000 candle right there. 68.5 to 67.4. There you are on BTC as that one is getting hit. Surprised Robinhood's not getting hit more with that. Robinhood was lower in the pre-markets, but Robinhood, Coin, MicroStrategy, Coinbase, there you go. There's a 3% candle on Coinbase down. It went from 167 to 159 on Coinbase immediately as Bitcoin took a hit. And then MicroStrategy, 4% down as that took a hit as well. Here's the Anthropic CEO talking about Capex growth.
The amount of compute the industry is building This year is probably in the, I don't know, very low tens of, call it 10, 15 gigawatts. Next year, it goes up by roughly 3x a year. So like next year's 30 or 40 gigawatts, and 2028 might be 100, 2029 might be like 300 gigawatts, and like each gigawatt costs like maybe 10. I mean, I'm doing the math in my head, but each gigawatt it costs maybe $10 billion, or order 10 to $15 billion a year. So, you put that all together and you're getting about what you described. You're getting multiple trillions a year by 2028 or 2029. So you're getting exactly that.
So if we have multiple trillions being spent a year by 2028, 2029, I mean, what does that mean for Nvidia and AMD and Broadcom? Like our semiconductor, like if that's accurate and we're actually going to compound at that level, the semiconductor stocks should be doing well. Wow, red candles across the board. Pretty ugly right there. Grab just lost 10 cents. Robinhood just lost a couple bucks. SoFi right back down to the red. Goodness, dude. Can't even give us a couple seconds of green. Google 305 back to 302. ServiceNow losing all of it. I mean, it's holding on to $1 of gains. CEO says, I'll buy 3 million of stock. Street's like, cool. You can enjoy buying your shitty stock at $107. We're not buying it. That stock's going red. ASTS down 4%, below 80. CoreWeave down 3. Disney's up for some reason. Enphase flat. Lemonade down. Lemonade got hit from 99 to 63 again. And Lemonade's, I don't even think it's the most expensive company when it was at 99. It's in that growth stock bucket. And if you're in the bucket of growth stocks, the algos are going to take you down. PayPal slightly up. Microsoft back below 400 again. Amazon back below 200 again. Plot twist. It was just shorts closing. Yep. The first 10 minutes of the day were just shorts closing. And then boom, we're right back to the volatility. Where's the VIX? VIX just spiked up. There you go. 21. We were just about to go below 21. And now we're at 21.44. Goodness gracious, dude. Goodness freaking gracious. Bloom Energy down 3. Estee Lauder up 1.5. Meta 635.80. That's down 0.5%. Yeah, at least Elf is up. At least the makeup is up. My goodness, bro. The gains came faster than me this weekend. Goodness gracious. Robinhood down 1.75%. Bitcoin 67,000. There you go. Still down from those levels. GameStop's up a little bit. This is what Michael Burry thinks is going to be the best stock of the year, I guess. GameStop right there, 23.64. HIMS is up a little bit. VRT, this one had a great earnings. That one is up as well. Caterpillar is down 1%. John Deere is down. All right, so everything's getting hit. Meta right back down to 635, as that one's also getting hit. And Estee Lauder is slightly up 1.3. Well, what's the headline for this? Well, there's probably not a headline. I mean, this is kind of what we've been seeing literally every day for the past 2 weeks. We do have some of these 13Fs coming out, though, and we're seeing more of what the biggest funds have been doing. Jane Street ended up buying 7 million IBIT shares. And 37.89 IBIT's down 2.7%. Jane Street now holds 20 million worth of IBIT, 790 million. This is the same entity rumored to be behind the daily 10 a.m. manipulation to push Bitcoin prices lower. I mean, honestly, I don't know if it's Jane Street, but it definitely feels like every day around this time, things go lower. Bitcoin losing 67. Bitcoin losing 67. Fear and greed. That is at fear. I thought we were at neutral. No, we're at, yeah, because Friday we ended up not pumping. We ended up going back down to 681. So we're officially in fear on fear and greed, which is good as a buy signal. I wonder if we actually go lower than what we're going to see. AMC, by the way, is refinancing $2.5 billion in bonds. AMC stock is up 2.43%. But you've got a lot more companies tapping the debt markets to try to deal with the debt on the balance sheet right here. Every day it's the same thing. Yeah, every day, unfortunately, It has been the same thing. Amazon right there, 197. Figma partners with Anthropic to turn AI-generated code into editable designs. Figma does have earnings tomorrow. I'm not going to be playing Figma earnings, but for anyone that wants to, the stock is down 80%. I mean, I know stocks can go to zero, but at what point? It's down 40% this year. At what point does this thing just rebound? So I think it's still too unsafe to play it because it is a software name, and any metric they say that's a little off maybe gets the street upset. But it does feel like enough of the selling, hopefully, is done. I just don't know enough about Figma's business to be super excited about it. Apple's up 1.4. Berkshire, is that up? There has been a lot of institutional buying of Grab. I haven't consolidated all of the 13Fs yet. Berkshire is up 1.62%. So give me like a day to do that. I'm still waiting for a lot of it to come out. Hopefully by Friday, I'll have everything consolidated for people. I mean, honestly, by Thursday, if it comes out today after hours or on Wednesday. And we'll know all of the Tiger Globals and Warren Buffett's and Bill Ackman's and what exactly they're doing, Stanley Druckenmiller. We've had a couple come out, but the still big names are not out yet. And so I think by Thursday we'll have those. Google goes red, back to almost 300. Where's AMD? AMD, wow. AMD potentially going back below 200. If that's the case, Nvidia is going below 180. Nvidia is 90 cents away from going below 180. I don't think AMD survives in the 198s, 197s without Nvidia following it down. Bloom Energy down 3.5. Rocket Lab down 2.6. Yeah, it's become advanced money destroyer again. It had a year of becoming advanced money duplicator, and now it went back. Reports showing Intel has delayed filing Form 14A. That is a type of proxy statement that the SEC requires companies to file before they hold an annual meeting or conduct a shareholder vote. Interesting. Not the best for Intel to not put that stuff out. Intel 46.19. Palantir is now down 2%. Well, the entire market following with it. Palantir down 2, Amazon down 1. Kind of weird that ELF is up 6.5%. I mean, it's good to see that for ELF, but kind of weird that it's being the hedge or the flight to safety against the tech sell-off. Bondi's 50K rant was the top. It would be quite hilarious if the rant of the Dow Jones being at 50K inside of Congress ended up being the top of the Dow Jones. I hope not, but I guess we're going to find out. Do you think people are buying ELF because of the makeup recession, which I learned about 2 years ago as a theory that when things go bad, women buy more makeup? Like I couldn't believe that, but like there's a lot of statistical evidence that shows when shit hits the fan, makeup sales go up. And maybe that's why ELF's catching a bit. I mean, there's no headline on ELF, right? I don't think so. Tobacco too. Yes, tobacco as well. ELF had good earnings and it got sold off. It was stupid. That's fair, but why today does it randomly go up? You know, I agree with you. The earnings sell-off was dumb, but like, why randomly today? AMD loses 200, 198. Once again, advanced money destroyer. D-Wave getting clobbered right here, down 6%. The quantum names just getting hit. What about the space names? Lunar, that's down 2. Rocket Lab down 3. ASTS down 4. Redwire down 5. Goodness, all these space names, quantum names. What about nuclear? Oklo down 4. SMR down 6. Okay, let's check rare earths. Are those holding up? USAR down 4. MP down 6. CRML down 7. Every hot growth sector just getting hit today. And this is not just 1 or 2% down. This is almost 5 to 7% on average on all of these names getting hit. eToro is still up 18. eToro being up 18 is impressive on a day like this because it's in the growth stock bucket as well. The earnings had to be that good that the street was like, nope, we're buying this one. Netflix, once again at 75.34. I wonder if they let this thing actually go to 70. Where's the money going? Let's pull up the heat map. Let's see if there's
an easy way to see the rotation today. Yeah, it's going to Greg Abel in Berkshire. Berkshire's up, Visa's up, JP Morgan's up, Lily's up, Apple is up. It's going back to kind of the traditional safety plays. Apple's actually up nicely, 259. Industrials are up, consumer defensives are up. Is Coca-Cola still up? Coca-Cola is indeed green. Yeah, it's going to Coke. Is Verizon above 50 yet? It's going to Verizon. Verizon's at 49. Going to Boeing, going to GE, going to Berkshire. All the AI cloud plays are down. Cypher, Nebius, Iren. Cypher's down 5. Iren's down 4. Nebius is down 4. Wolf is down 6. Memory is down with Micron. Microsoft's down. Oracle's down. I mean, it's almost every day we've been seeing the same stuff, right, guys? It's almost every day. VIX is at an intraday high, 22.19. VIX is up 7%. SPY's got to be below 680. Yeah, there you go. SPY 678. Dude, look at those candles. Like, it's just like it's like we took the elevator down. You know, you take the stairs up and you just take the elevator right down. And 677.85 low of the day on the SPY, down 0.58. I shorted FedEx because Amit likes UPS. You know, that's what you have to do sometimes. You got to short the competitors. But in this case, FedEx and UPS might be better bets than companies that are growing far faster than them. FedEx is up 30% this year. Bro, like, I'm not saying FedEx doesn't deserve a bid, but this is kind of becoming insanity, dude. Like, really? FedEx is the one that deserves all the momentum just because it's not as scary as Amazon because they're spending on Capex, even though FedEx's business is not anything comparable to Amazon on a variety of different levels. UPS, my employer, that I don't have any stock-based compensation in, unfortunately, I need to renegotiate that, up 16%. Coping because you work for UPS? Yeah, exactly. Like, I'm not even trying to be naive and say the value stocks don't deserve a bid. When you look at the numbers, Steve had a really good video on his channel over the weekend where he took the claim head on. You know, the claim is Walmart is predictable cash flows, Amazon, et cetera. They're all cyclical. They're scary. They're tech. They can go back and forth, yada, yada. And that's why, you know, you should go into safety. Walmart is safety. But then you look at the earnings multiple on that safety. At the end of the day, you're still paying a valuation for these companies. And then you look at the quote unquote unpredictability of revenue growth, EPS growth, et cetera, on companies like Amazon. It's night and day. Amazon's performing by a 2x margin, and the predictability of cash flows, maybe you can make that argument on Nvidia. Maybe you can make that argument about Tesla. You can't make that argument about Amazon, Meta, Microsoft, and Google. You just can't. These companies are too important. I know people are always going to need toilet paper, and that's why Walmart will always be in business, but a lot of people can buy toilet paper on Amazon. And even if Walmart sells more toilet paper, it doesn't mean that Amazon's toilet paper sales are unpredictable enough to the point where you have to go into safety and pay for negative growth or 3% year-over-year growth. So it is quite incredible to see why that rotation's happening. I think it's a problem with the United States. It's uninvestable in and of itself. Well, okay, but then a lot of these US companies wouldn't be catching a bid, right? Like, if the entire United States is uninvestable, which again, you know, what's the thesis on that? Just geopolitical, people hate Trump. I mean, maybe, but these are the companies putting up earnings. Now, having said that, you are right about the performance. I mean, the Nikkei is up way more than the S&P this year. China and India are the only ones that are doing worse than the S&P. But Peru, Chile, we looked at the chart last week. A lot of these companies countries are outperforming the United States. I would say it's more irrational to sell off the United States versus the United States is uninvestable. Because the earnings growth coming from the United States is what investors look for. And that's what people are investing in. It's the $38 trillion in debt. Okay, but remember, the debt at the end of the day, Google now, low of day 297. We still have the best debt in the world, right? Like, yes, the debt is bad. I agree with it. But it's not like other countries have their debt under control. And if they do, it's because they don't have a country big enough where they have to take out a lot of debt. Japan, China, these countries don't have their debt under control. And U.S. debt is still the debt that wants to catch a bid. Now, I agree with you. There's certain things the United States is doing that doesn't give investors a lot of confidence in the debt that we have. But I don't think the debt is the reason why you sell off the United States. If that's the case, Tesla, my goodness, potentially going below 400. If that's the case, the only safe haven is gold, which is what Dalio's been saying for a long time. And gold and silver slowed down on the day. If the U.S. is completely uninvestable because of debt, which, by the way, Dalio wrote an article over the weekend saying that the new world order has collapsed or something like that. The global world order has collapsed. The last time he wrote an article like that was 2009, before we ripped for the next 15 years, and 2019, before the S&P went up 40%. So usually his viral articles claiming that something is going to collapse tends to be a bottom indicator. I'm not saying it is this time, but if that is the case, then I don't know if you can just chalk it up to you as debt in and of itself. Snowflake down 4, Salesforce down 2, Adobe down 2, IGV down 2.6. What about Novo? Novo's down 1.2. BTC, are we still ugly there? BTC, I mean, it's below 67, 66.7. Someone says people are stuck in companies that have not regained their all-time highs. It's been 5 months. People need to wake up. So I think that's a fair point. I think it's a fair argument to say, hey, look, if Meta has not regained all-time highs in 5 months, which it got close to when it was at 750 after earnings, then maybe the rotation is happening. That is fair. And that's why I don't want to dismiss the rotation into the Caterpillars and John Deere's and Walmarts of the world. Nvidia loses 180. There you go. That was inevitable. There it is. Having said that, we're all still investors at the end of the day. And we all still look at PE multiples and PEG ratios. You're paying a 6 PEG ratio, 5.93 for Walmart and Costco. You're paying 1.7 for Meta, 1.3 for Microsoft. At some point, it becomes kind of stupid. And I've just heard zero justification for why you have to pay a 6 PEG for Costco and Walmart and 1.3 for Microsoft and Meta. Now, if the argument is that AI is a bubble, AI is fake, and Meta and Microsoft's growth is going to absolutely collapse because AI is going to collapse, and maybe that's the biggest fear that's on Wall Street, then yeah, you want to be in Costco, Verizon, and Walmart because those companies will not collapse if AI collapses. But then that comes down to AI bubble fears again, which I thought we were kind of over in January. We had it in November, then we recovered to the end of December, then January we went higher. But I guess those are back. And maybe that's kind of the broader argument for why this is happening. But I also don't think 5 months is enough of a time frame to be like, oh, well, Meta isn't back at 800 after 5 months. It's like, okay, but in 5 years, do we really think Meta is going to underperform John Deere or Verizon? I mean, I would disagree with that. But that's how the market's acting. Salesforce right there, still down 2.5. Robinhood Ventures IPO fund is going to be $1 billion. Let me see if I have some more data on this. It's called RVI on Robinhood. Robinhood Ventures. Oh, we already got the list. Okay, so 23% of the fund is Databricks. 14% is Revolt, which is a European fintech. 14% is Mercer, which I think is a French AI company. It's an AI models company. Then you have Airwallex is at 7%. I don't know what that is. Boom, Supersonic, 7%. I think those are super private fast jets. Aura, is that Aura Ring? Yeah, Aura Ring, that's 7% of the fund. Ramp is 7%. That's a really good fintech. But see, Ramp has a $32 billion valuation. I'm sorry, they're doing $1 billion in revenue. Square has a $30 billion valuation and is doing $8 billion in revenue. If Ramp was a public company, I don't know if you put it up against Square's, and I'm not a fan of Block. I'm not a fan of Jack Dorsey, not a fan of the company, but you're paying $32 billion for Ramp and they do $1 billion in revenue versus Block trading at 1.2 times price. So if this was public, I think the stock would be down just like Block is, which is why I don't think buying into these makes a lot of sense. But yeah, $1 billion is the fund. And it looks like Robinhood invested $230 million into Databricks, $140 million into Revolt, and then the corresponding, they have a 19% in cash. So Robinhood's fund has $200 million, $190 million in cash in this initial fund. And I guess we'll get clips of the roadshow later today. I think we have some housing data that just came out. The NAHB housing market index came in at 36. The street was looking for 38. Street was looking for 38. So that is a miss on the housing data. S&P pretty much lows of the day right there, 677. Let's pull this up. We got some ugly housing data last week as well. It wasn't pretty. And it looks like the sentiment on home builders continues to not be pretty. I'll check the rate cut odds in a second after this.
Has that for us, Diana.
Home builder sentiment in the single-family market dropped 1 point in February to 36 on the NAHB index. Now, the street was actually looking for a 1-point gain. This is the second straight month of declines. The index stood at 42 in February of last year, even though mortgage rates were significantly higher last year. Builders cite persistent affordability challenges, including high housing price to income ratios and elevated land and construction costs, help push builder confidence lower for the second straight month to start the year. Now, of the index's three components, current sales conditions were unchanged at 41 from January. Buyer traffic fell 2 points to 22, and future sales expectations fell 3 points to 46. The survey found fewer builders cutting prices, though, 36% down from 40% in January. That's the lowest share since last May. The use of sales incentives was 65% in February. That's unchanged from January and marking the 11th straight month that this share has exceeded 60%. The builders did note that although demand for new construction has weakened, remodeling demand is solid. Of course, thanks to a lack of household mobility. Nobody's moving, Carl.
Fix up your own place if you can't change. Diana, thank you for that, Diana Olick. Stocks under a little pressure here this morning as early trade begins, coming off of that downbeat week. Let's bring in Mohamed El-Arian today, Allianz chief.
All right, housing index, once again, not really being the best. And that continues to create more pain for the equity markets. Where's Lennar, which is one of your home builders? Lennar, 2.39% on that headline. Guys are saying I'm saying it wrong. How do you say it? Isn't it Revolt? Was it Revolut or something? I don't know, guys. I don't know. But to be honest, doesn't matter. Everything's down. Does it really matter how we're saying the name of these companies anymore? Nebius is down 2. Iren's down 4. Revolut, that's how you say it? Okay, it looked like Revolt. Like, sue me. Like, it looked like freaking Revolt. Revolut. I don't know, bro. I'm not from Europe. I don't know that's how you pronounce it. What does that even mean? Revolut. Revolut. It's a financial. I mean, I've heard of the company, obviously. London-based global financial company, 65 million users. I don't know what it means, but yeah. I mean, again, the private funds. It's not exciting. None of these valuations are exciting at all. No matter how much the hype comes around them, it just doesn't feel exciting. And it just feels more like exit liquidity. I bet that's down 2.3. Silver still tanking. SLV. It means financial revolution. They should have called it Revolt then. Revolution. I guess Revolut is the European way of shortening revolution or whatever, dude. Silver's down 5.2. Okay, silver actually falling off nicely. eToro was at 33. Now it's at 31.75. Let me check the probabilities on the rate cut. Wow, rate cut probability went down. It was at 10. Now it's at 7.9. Amcor, they had a good earnings last week, but they didn't actually dilute. They offered 10 million shares for sale to the public, but those are existing sales from one of the original families that owns the company. So it wasn't actually net new shares, which is good. So quite frankly, the stock shouldn't really be down on like dilution fears, but the stock nonetheless is down 5.2% as that one goes red. Amir said using Revolut in Japan right now. Me and Arnie used it in New York with you too. Solid app. Yeah, I've definitely heard about the company just because in the private markets, it's a big deal. But like, again, it's a $32 billion company doing $1 billion in revenue. I'm not paying $32 billion for that. Like, and I just, not when in the public market, there's so many better deals. So I guess we'll see how much demand, but I'm sure there are going to be people that pay for that. There's plenty of people that want exposure to it. And so I still think those IPOs will do well. AWS announces up to $100 million in federal credits to accelerate innovation for national security and scientific missions. Okay, so you got Amazon trying to get some more deals with the government. 198.38. Amazon is flat. Well, not flat. It actually is flat. It was at 203. Now it's at 198. Revolut is 75 billion. That's the valuation. Oh my goodness, you're right. As of November 2025, holy crap. Bro, 75 billion. Yeah, I'm sorry. In the public markets, I don't know if it survives at 75 billion. I don't know if it does. I don't care what the growth rate is. I don't know in the public markets. If the market hates growth and hates fintech, what is Revolut? It's growth and fintech. You put it to the public markets, they better have a really good narrative to not get clobbered with public markets and algorithms going back and forth. And at Rocket Labs, that's down about 2%. Palantir, that's down 1.2%, and then Intel, that's still down 2.3% today as well. I think the private equity fund is also poorly timed. All these businesses are gearing up for IPO at peak valuations. Yeah, I agree. And look, honestly, the only reason Robinhood's probably able to offer it is because all these companies are trying to go public because they know this is the best time they can go. I mean, I don't know if you can afford to wait until 2028, because if we have a slowdown, like, you're just not going to be able to get the market sentiment to be able to pay what they're paying. Now, Anduril, a headline came out over the weekend, not confirmed, but Bloomberg reported Anduril upped their valuation from 30 billion to 60 billion, which is great for all the people that are privately in Anduril, but it's not going public this year. So Anduril might wait a little longer, but I mean, when they do go public, they're not going to be 60 billion. They're going to try to go for 100 billion. And again, it's going to be like, hey, is the sentiment of the market ready to pay that much for a hardware defense contractor with probably horrible margins, even if they're growing fast? Figma still down. Nebius is down. MP, that's down 5%. The rare earth names are still down. VG getting hit as well. That's down 5%. You had another headline over the weekend about DeepSeek, the Chinese AI lab, and how they put out a new model for, I think the exact multiple was 3x lost the compute of ChatGPT for certain workflows, which started to get some people wondering, hey, do we really need to spend this much money on Capex if, like, these Chinese companies are able to produce the same stuff in an open source way for a cheaper amount of tokens? And, like, that's a legit concern. I think that actually is a legitimate argument. Now, again, I don't think DeepSeek coming out with a model that works in certain parameters lower than ChatGPT is enough to get the entire Capex story to be dead. But it is an argument that I think people are wondering about, which is that if the open source versions can do this with less qualified NVIDIA chips, aka the H200s and not the Blackwells, doesn't mean we're spending way too much on Capex. Having said that, the Chinese, are tending to copy and not necessarily innovate exactly in the model space, but try to replicate what they're seeing here. And maybe the innovations require a lot more compute. AMD right there down 5% officially, 196, as that continues to go down as well. Chinese markets are closed this week. That's a good point. You have the Lunar New Year today. So happy Lunar New Year to everyone who celebrates that. But that also means we might have less activity in the overall markets. Nvidia back above 180, bounced on 179. It's up a little bit here. We are not under the 200-day moving average on the S&P yet. I believe, correct me if I'm wrong, that's 672. The 200-day moving. It's in that 670 to 672 range. So we still have a little bit to go before we lose that. Now, you know what they say, nothing good happens below the 200-day moving. So if we get there, which we almost got there 2 Thursdays ago, we were at 671. And we ended up recovering the next day, up 2%, got to 690. And now we're kind of back to seeing it, which is a bit ugly. By the way, speaking of Capex, Seed Dance 2.0, a model from freaking ByteDance, came out over the weekend. And as you can see right here on your screen, this is a AI movie that was built with that model. And it's kind of crazy because it looks real, but the more and more that you're seeing momentum around these models, the more and more you're seeing new progress. And if, again, everything you're looking at right now is pure AI. If this is where the world is going, and this is the worst it's going to be, like, one would argue, yeah, you're going to need a lot more compute to be able to build out the way this stuff is going. Now, people may say, well, movies are not the biggest use case of this AI revolution. And sure, but it still goes to prove the point that if we are seeing this type of progress in terms of literal movies being created, which, I mean, this thing looks like a relatively real movie to me. Obviously, some parts of it look fake, but it's going to get better and better. But that means the compute constraints are only going to get bigger and bigger. And it doesn't look like that's necessarily slowing down. Also, there was a really good clip over the weekend of the AWS CEO talking about compute. And essentially what he said is that we are more capacity constrained than demand constrained when it comes to compute. And he thinks that's going to happen basically for the next couple of years.
For us, we see most compute workloads are going to want to move to the cloud over time. And if we can have the very best infrastructure, which we have today, the very best set of services, which we have today, and the broadest footprint, we think we can continue to capture the lion's share of that business, which is what we do today. And so when we think about investment, actually, if you think about investment compared to our peers, it really is on a relative basis. And you kind of think about, how you can, and everybody is investing a lot because they see this opportunity out there. And even with all of this investment, my best estimation is we will be capacity constrained for the next couple of years. Is we will sell every single server and every single bit, and we will wish that we had more. And that I think is where the state of the world is going to be for at least the next couple of years. And so we are on this, look, AI is a step change in technology. It's a brand new infrastructure. It's a build out. It's driving a bunch of these pieces. And so we are investing to make sure that AWS maintains our leadership position in that. And we feel quite good about the prospects there.
Again, when you hear executives talk about the AI build out and how compute constrained they are and how much they want to invest to be able to maintain their leadership position, it makes you think the sell-off is like a natural part of the market being upset about free cash flow going negative, for example, which is what's going to happen with Amazon, but not something where you run for the hills and say it's a bubble. Like, yeah, free cash flow is going to go negative. Amazon might be down the whole year, but it doesn't mean run for the hills. It's a scam. It's fake. AI is not real, et cetera, et cetera. And I think that's the saving grace of the sell-off right here, which potentially creates a relatively decent buying opportunity. This also came choreographing this stuff. So it is quite incredible to see how much momentum is happening there. And that, again, leads me to believe this AI stuff isn't fake, but the market is upset about the Capex that's being spent. S&P 676, folks, we are almost down 1% on the day. BM&R is down 5, Meta's down 1, Netflix still down 1.6, Silver's down 5. Silver's getting whapped today. I don't know why silver is getting hit as bad. Gold is also down 3%, 48.55. VG's down 5. Bitcoin still below 67. Rich Tech Robotics, this thing got, below $3. This thing got pumped off a Microsoft deal, and then it got dumped the day after. AppLovin down another 4. Reddit goes red. Twilio down 6. They had a good earnings, I thought. Twilio got hit. CoreWeave down 6. Copper ETF down 7. Shopify goes red. GameStop goes red. SMH Semiconductors go red. Is Apple red? No, Apple's actually holding up. So Apple is the safety today. And Elf is the safety today. But everything else getting red. I don't even think Rich Tech Robotics had a deal. Yeah, I didn't really look into it too much, but I mean, the Microsoft name being attached to them was a bit, this thing got to 550 and then they diluted the next day like they should. And, now it's right back down. Some of this stuff, again, you tend to see when things are getting a little too frothy. And obviously we definitely got a lot of the froth kicked out of the system, I would think. Now, people say, well, the S&P is still frothy because it trades at one of its highest PE multiples in history. It's like, that's fair. But the largest components of the S&P, the Max 7, which comprise 40% of the S&P, they are not frothy. Like outside of Tesla, none of those are frothy. So what is frothy is what feels like Walmart, Costco, and some of those other value names now that are propping up the S&P to continue to keep it as expensive as it's been. But that might not be a healthy type of frothy or a justified type of frothy when the most important names in the index, which is why the S&P is not really moving, because Walmart could go up another 20%. Like, it's not going to move the S&P. You need Nvidia, Tesla, Amazon to participate. And they just haven't, which is why I think the S&P has been stuck at these levels. PCE Friday could make it worse. We do get PCE on Friday. Now we did, I forgot to talk about CPI because I wasn't live on Friday, but CPI was 2.4. We came in better than expectations last week. So we were kind of saved by the bell a little bit, and that CPI helped us pump. We ended up dumping towards the end of the day. I wonder if PCE will also be similar, where we get a nice little pump and it helps out. And then we end up getting hit. The expectation for Friday's PCE is 2.9%. So we got to beat 2.9. So we don't know if we're getting a Supreme Court decision on Friday, but the Supreme Court did announce that they will be issuing opinions on Friday. They didn't say for which cases they will be issuing an opinion on. Now, obviously, it's been 2 months at this point. It's time for them to give an opinion on the tariffs, but that could also heighten the volatility on Friday if we get a reversal of the tariffs and we get a PCE that is not as good as expected. The Rich Tech Robotics thing was never a partnership. It was just a headline. All right, well, whoever bought it on some idea of a partnership is bag holding about 50% now on these shares. Nebius is down 2%. Do you think stocks go up or down if reversal on tariffs? That's a great question for a poll. Let's do that in the chat. My gut this is just my gut reaction. I think stocks go down. I do not think it is good if we reverse all the trade deals we've made in the past year and the Supreme Court makes it illegal for us to have negotiated $550 billion of investments from Japan with tariffs as the linchpin to create it. Having said that, the argument on the stocks going up is that the market never liked tariffs, right? So if the markets go up, if tariffs go away, then there's no fear from the markets around tariffs. However, we're not really seeing that much inflation from tariffs. CPI just came in at 2.4, below expectations. So like if the fear of the tariffs was that it would create inflation, which would lead to less chance of a rate cut, we're not seeing that. I mean, Jay Powell himself literally said the tariffs were a one-time pricing adjustment and we're not seeing significant inflation. So I think there's actually more downside to like all these countries being like, oh, yeah, hey, Mr. Trump, you can't tariff us anymore, so we're going to renege this deal entirely. And now we have leverage. You don't have the leverage. And Trump having to renegotiate for another year of these deals, if he even has the capacity to renegotiate these deals, versus like the tariff headline being good for the inflation expectations because inflation is already coming down pretty decisively. So I think stocks go down. I think it's more uncertainty, but maybe we'll find out on Friday. Why is AMD down? Any news? There's nothing specific on AMD other than a lot of these growth stocks are getting hit. FedEx, that's up a little bit. Novo's down 1.3. AMD. Wow, there's some news on AMD. I don't know if it's about why the stock's down, but it submitted its first ever 13F filing. AMD has never submitted a 13F filing before, but its AUM exceeded 100 million, so they're forced to. So they bought two companies, SANM, Sanema Corporation. This is a $7 billion company. They bought 1.1 million shares, $172 million. And then they bought ABSI, healthcare company. This is a $2 stock, $375 million market cap. I'm surprised that stock's not up on this news. They bought 5 million shares, 20 million worth of the company. I've never heard of these names before, but SANM and ABSI, AMD's first ever 13F. US dollar turns positive versus the yen. Let's take a look at the JPY right now. Yeah, it does. Okay, so the yen right there at 153. It was at 157 last week. So we're seeing that come down a little bit. The Dixie in general has been strong. That is correct. We're at 97.4, up 0.5%. Could this be the reason why the markets are facing some volatility? I think kind of, but quite frankly, when the dollar was going down, markets were also facing a fair bit of volatility. So I don't know if it's the Dixie going up or down is the basis for stocks going up or down. I really do think, based on what I read over the weekend, the Capex fears and the SaaS sell-off fears continue to be the largest concern around the market. Oh, we have a video right here. Let me pull this up. The CFTC just made a statement about prediction markets. Remember, the CFTC, Commodities Futures Trading Commission, is the only reason that prediction markets are legal. They deemed prediction markets to be futures contracts, not sports gambling. And that's why Robinhood and Kalshi are able to get away with it. Let's see what this guy has to say.
CFTC Chairman Mike Seelig here. Over the past year, American prediction markets have been hit with an onslaught of state-led litigation. In response, the CFTC has today filed a friend of the court brief to defend its exclusive jurisdiction over these derivative markets.
Bro, we have filed an exclusive brief to defend our jurisdiction of these derivative contracts. This guy is on the side of prediction markets. That's crazy. Now, if we get a new administration in 2028, that may change because this guy might be out of here. But they are defending these prediction markets.
Prediction markets aren't new. The CFTC has regulated these markets for over 2 decades. They provide useful functions for society by allowing everyday Americans to hedge commercial risks like increases in temperature and energy price spikes. They also serve as an important check on our news media and our information streams. Today, the CFTC is taking an important step to ensure that these markets have a place here in America and have the integrity and resilience and vibrancy that our derivatives markets deserve. To those who seek to challenge our authority in this space, let me be clear. We will see you in court.
How much did Kalshi pay him, bro? How much is Kalshi? Dude, that guy, he's got to own some Kalshi stock privately, bro. My goodness. They are straight up just defending the prediction markets. And look, if you're a Robinhood shareholder, you got to be happy about that because at the end of the day, if prediction markets were to be deemed completely illegal, Hood would lose a lot of money off that. But that is a pretty explicit defense of the markets. And again, the only reason people can trade these things as if they're like stocks is because the CFTC decided they were not they shouldn't be classified under traditional gambling, which, you know, there are some technical nuances for why they shouldn't be deemed as gambling, even though obviously a majority of it is sports contracts, which is gambling. But there you go. You got a pretty big defense. By the way, there's this new commission that's going to be an advisor to the CFTC. It's essentially a lobbying board, and Tarek from Kalshi is on it, and Vlad from Robinhood is also on it. So both of those CEOs are on that. I don't know what you call it. It's like a think tank, a lobbying board, whatever you want to call it, but they're going to be helping to advise the CFTC. Wow, Palantir, we have moved our headquarters to Miami, Florida. Huh. We have moved our headquarters to Miami, Florida. Interesting. So they're leaving Colorado and they're going to Miami. You know what that means? Gotta have a visit to Miami and have some fun. Get to visit the Palantir HQ. Have a nice party. All right, now I have an excuse to go to Miami. Miami meetup immediately. It's got to happen now. It's got to happen. Okay, so the reason this is happening, top of my head, I'm seeing this right now, as you guys, it was tweeted 2 minutes ago from Palantir. They probably got annoyed at all the protesters in Colorado because there are a lot of them in Denver. They probably wanted to be in an area that was more friendly towards tech and finance, which, I mean, look, Silicon Valley has its own host of regulatory issues and protesters every day. New York, I don't know if people saw last week, outside of the New York offices, there was like a line of protesters that were outside of Palantir's offices. Miami, I've never really seen that many protests in Miami, and Miami, from a regulatory regime, is becoming a lot more friendly to companies, hedge funds, tech companies, et cetera, that incorporate. There's no state income tax, all that stuff. So that's interesting. That is interesting. Looks like they are officially leaving. Founders Fund is in Miami. Peter Thiel's in Miami. Obviously, there's a connection there with Palantir. So that also makes sense. Florida. Also, yeah, the potential billionaire tax in California. Oh, did we talk about what the Netherlands did? Who here is from the Netherlands in the chat? You guys just decided to take away 36% of unrealized capital gains in the Netherlands. It's kind of crazy, bro. It officially passed 36% tax on unrealized gains, which means if you have $100 of gains, I should say 100 million, more likely, unrealized. I don't know if that's the exact threshold, but you guys get the point. 36 million of it you would have to give up even if you didn't actually take the profits. That's kind of wild, bro. That's kind of wild. How can you tax paper gains? Well, again, that's what they're trying to do in California, right? They're trying to do that. That's part of the reason why Sergey and Larry and Zuckerberg just bought a $200 million house in Florida. The Google co-founders left. Peter Thiel, I think, started incorporating a lot of his separate businesses outside of California into Miami. I mean, I think a lot of those people are just saying enough is enough. We're not going to stand for this. By the way, eToro losing some of its pump. It was up 18, now it's up 13. And that's now a little red. Are they doing the same for unrealized losses? I don't think it goes the same for unrealized losses. I don't think so. But it's just crazy, again, because when you think of it, like, it's so hard to fight for gains. All of us are realizing for the first 2 months of the year how hard it is to hold on to your gains. Like, it's a tough world. You take your hard-earned money, you put it into equities, you hope and trust that the CEOs that are allocating capital are going to be able to effectively grow earnings. You deal with all the algorithms and JPOW and Trump tweets and all this stuff. And then at the end, you hope there's something left over for you after allocating all that capital. And if there is something left over, but you didn't even realize it yet, and they still take away from that, it obviously can create a lot of disincentives to, want to continue investing. It only passed the House of the Netherlands, not the Senate. Okay, so I guess the question is, will it pass the Senate then? See, I don't even think something like this would pass the House of the United States. As much as you have Democrats in the House that would probably want to see this, I don't think this could even pass one part of Congress here. Maybe in certain states like California. All right, so we're going to keep updated on the story. I mean, if that passes the Senate in the Netherlands after passing the House and becomes official law, it will pass. All right, if you're in the Netherlands right now, put in the chat if you think this has a good shot of getting passed. Also, what was the vote in the House? Netherlands House vote, unrealized tax. Was it like a far majority? Or was it like just barely? Wow, 90. They needed 75 votes. They got 93 in the House. A 36% flat tax rate will be applied to returns on savings bonds and unrealized gains on stocks and cryptocurrency. So they put crypto in there as well. They're going to use a mark-to-market approach for liquid assets like stocks and crypto. The tax authority will measure the difference in value between the start and the end of the year, taxing the increase even if the assets are not sold. My goodness. And they had 93 votes ahead of the 75. Damn. Well, I guess we'll see if that ends up happening in other countries as well. Okay, markets are still down. We're not really seeing any reversals. Oh, we got another 13F from the Saudis. The Saudis. Let's see what the Saudis are buying. Here's their 13F. They did nothing. They did literally nothing. They bought nothing. They sold Take-Two Interactive. Wow, 11 million. The Prince of Saudi Arabia probably got a phone call one day. And it was like, sir, Grand Theft Auto has been delayed again. And he was like, dump all of it. So they sold all 11 million shares of Take-Two Interactive, which is the parent company of Grand Theft Auto. And they kept everything else the same. Uber, EA, Lucid, CTEV, and ALU warrants. That is the current top 5 positions of the Saudi 13F investment fund. Where is Nvidia's 13F? Did they even put it out yet? Let me check if Nvidia put it out yet. Yeah, SoftBank has dissolved their stake in Nvidia. We saw that last month because they're buying OpenAI. So SoftBank sold like a $6 billion stake in Nvidia. I don't think Nvidia put out their 13F yet. But if they did it, it's the same 4 companies. It's Intel, CoreWeave, APLD, and then another one, I think Navitas. So there's only a couple of companies that are really in there, and CoreWeave is like 85% of the entire portfolio. The VIX is spiking, guys, again. Goodness gracious. VIX is now up 8% on the day. Sorry, 11%, 2284. S&P is 10 cents away from making new lows for the day. Nope, new lows. There it is, 676.20 on the S&P. 676.08. Are we going to lose 676? We lost 676. 675.90 as the VIX continues to spike. The S&P continues to get hit. Robinhood, 73. Palantir, 128. Where's Nvidia? It's got to be at least 179. Nvidia, 179.80. AppLovin down 4. Reddit down 3. SMH down 2. SoftBank also cuts T-Mobile. I think we heard about that a couple weeks ago as well. They're selling a lot of their public stakes for OpenAI, which I don't know if that's going to be a big deal. However, big W for OpenAI over the weekend. They acquired the guy who created OpenClaw. For those that don't know what OpenClaw is, it's a open sourced agent framework that people have been using a lot. It's gone insanely viral, millions of downloads. People are using it to set up meetings for them and become their personal assistant and check their calendar and emails and all this stuff. It can like go through a podcast and cut up clips if you prompt it in the right way. It's like this really cool framework. Claude ended up suing the guy who created it because he called it Claudebot. So Anthropic ended up suing, or they were threatening to sue him. And OpenAI ended up, I think, giving him $1 billion in stock. That's what it's rumored, that they gave him $1 billion to join OpenAI. So his name is Peter Steinberg. Very big W for OpenAI getting that guy. And I don't know why Anthropic wouldn't have just offered him a job, but Anthropic threatened to go the wrong direction. Now, again, Anthropic is more agentic workflows in the enterprise. OpenAI is trying to create agents for the consumer. So it makes sense that the consumer adaptions of that OpenClaw technology would be synergistic with OpenAI. However, like if the guy could create something that goes that viral and people are using it that much, I would think any AI company would want him just to be part of their ecosystem. But OpenAI ended up getting him. Okla right there. Fat is down 3% as well. Meta, Tesla, oh my goodness, $1 away from going below 400. Meta, are we at 620 yet? We're at 630, so we're 2%. Nope, we just touched 629. Once again, markets open up pretty ugly. S&P got a little bit of a bounce off 675. We're at 676. Did they actually pay him $1 billion? That's the rumor. If they did, it would be in stock. I doubt they would do it in cash. But like, dude, he went like his product went viral. Like you had a lot of thought leaders saying this is the best agentic framework I've used to like handle basic, like Siri should be handling your scheduling of meetings by now if you have an Apple device, and it could barely set an alarm for you. So the fact that an open source product is doing it, it's quite exceptional. There's your heat map. Google's red, Apple's green. That is, I guess, part of what's holding on the broader market. Jammy, thanks for the super chat. Do you still have your grab spreads? If so, what's the plan of those? I still do. I'm going to wait until May. I mean, again, I just think grab is too cheap to be selling it at these levels. So let's see over the next couple months where tech goes, where the growth sell-off goes, if it turns into a rebound. If so, I think we'll have some good earnings under our belt. And maybe the Walmarts of the world will not trade at 45 times earnings, and Nvidia will get back to those multiples. And if that's the case, an entire rotation can happen. But we still have a lot of time on those contracts, have another year, basically. So I would definitely want to give it more time before deciding what to do with it. Amcor, that's down 5. Silver is down 5. I know people here are in Amazon Leaps in particular. The only fear I have of Amazon Leaps, which is the same fear about Leaps that I have on any stock, including Grab or SoFi. I know a lot of people have SoFi Leaps for 2027. Is will this year be a year where these names can meaningfully show the alpha that's necessary to have their stock prices go up? Or is it going to be a year where they show a lot of gains in terms of earnings, but the stock prices are not going to follow? Which for the past 3 years, that hasn't happened, right? For the past 3 years, if you show the growth on earnings, the stock prices follow. If this year is the opposite, then Leaps are going to get destroyed. Like options, it's going to be an option seller's market versus an options buyer market, which last year was also an option seller market. But if you timed it correctly, Like if you bought leaps on Micron, I mean, you made a killing. Micron now back below 400 because Micron was at freaking $80. Even if you bought leaps when it was at $200, you did well. But the underlying has to move higher for those leaps to benefit. I mean, SoFi leaps have been destroyed because the stock went from 27 to 20. And the same is similar with a lot of these other companies. When did checking your calendar become difficult? I don't think it's about it becoming difficult. I think it's about people want to see, hey, if I tell an AI agent to like schedule meetings or set up a Zoom link and send it to this person via Google Calendar, like can it do this stuff? Can I just prompt it to do stuff and it happens? You know, if I have an emergency lunch that just got scheduled 20 minutes ago that I have to take, can you send an email to the person that I was supposed to have a meeting with and say, hey, I'm sorry, can we reschedule? And then literally reschedule the meeting by going back and forth in the email. Like, can agents get that good where we literally don't have to do any of that stuff, which, you know, quite frankly means you don't even need to have a personal assistant anymore because the agent would do everything. I don't think we're there yet, but this OpenClaw shit is like the closest I think people have seen to it actually being able to do this stuff. And that's why I think, OpenAI acquired them. Wow, Snowflake down 5%. Snowflake down 5%. The SaaS sell-off continues to get worse. IGV also is down. Is this serious? Is this actually serious? Nope, 1414. Yeah, you're right. There is a company called Hopium that is up 280% today. You probably won't find this on Robinhood. It looks like an OTC stock. Yeah, this has got to be the bottom, right? Hopium is up 283%. This has got to be a bottom signal. What the hell do they do? Hopium SA. It's worth 2 cents. How the hell did this get pumped? It's a hydrogen fuel cell company from France. If I'm on the right website. Okay. Well, that's got to be some hopium for us. That's got to be some hopium for us. Hopium, 280%. Fear and greed, lowest level, 33 today. 33 on fear and greed. Are we getting close? Do we need to really see 671 like we saw 2 weeks ago? Or are we ready to bounce? 676, it's almost 11. Zeta getting hit. Zeta is down another 3% with the SaaS names. Robinhood, a little bounce right there, a little green candle from 73.80. AMD as well, very small bounce, but still down 5%. Yeah, again, SoftBank sold Nvidia, 32 million shares. We knew about that a couple of weeks ago or a couple of months ago as they're buying OpenAI. They also sold T-Mobile. SoftBank better be pretty freaking confident that OpenAI is going to, because they're buying OpenAI at like a $500 billion value. They're not getting it in a, I mean, like, if they think OpenAI is going to go to $1 trillion, that's only a 2x. So like, they got to think OpenAI is going to like many trillions for them to be cutting Nvidia here. Which, look, OpenAI might outperform Nvidia, but man, the risk you're taking on OpenAI versus Nvidia. Like, you got Gemini going after the consumer, you got Anthropic going after the enterprise, you have everyone who hates Sam Altman, you got Elon suing them. Yeah, they have 1 billion users, but like, is that the only thing that matters? Tanner, are we buying eToro? Tanner, we were supposed to buy it before it went up 15%. Having said that, the earnings were pretty damn good. But I don't know in this market if I trust buying into strength. Last year, you could buy into strength and get rewarded almost every time. If the company was relatively decent, you could buy into strength and not have to worry about stuff. I don't know if those eToro earnings were enough to just say, this is a name that you could buy into. Google 298. It's still below where I started looking at it at 30. That's crazy. That means it fell so much over the past 2 weeks that even after the pump, it's lower than when Tanner first started looking at this thing. I mean, that definitely makes it exciting to look at again, especially after these numbers. but I wonder if we could trust it. I wonder if you can trust it. 16% on eToro. That's having one of the best days in the market so far. CoreWeave did go below 90 at one point. It's now back at 90. CoreWeave was at 115 3 weeks ago. Did you talk about Robinhood Ventures? Yes, we talked about it. They will be doing a road show. It's $25. As you can see right here, Robinhood Ventures Fund 1. $1 billion, it looks like, is what the fund is going to be at. Databricks, Revolut, Airwallex, Aura, Ramp, Boom, Supersonic, potentially Stripe. And they'll be doing the IPO today for IPOs on February 26th, but they're going to be doing the road show today. Again, I will not be buying into this. I do not like the valuations on any of these stocks. So I like that Robinhood's doing this because they're probably going to make money off of it. And it's another offering to get retail into these private names. But I don't like any of those companies or any of their valuations. And so I will not be a buyer of that fund unless they give some good deals. And we'll see in the roadshow what these deals look like. But if these companies are trading at the valuations, like I'm not buying Databricks at 130 billion. I'm not doing that. Like, no. Oh, it actually gives it to you right there. Oh, this is really cool. So if you click on the thing, it tells you the valuation of it. Databricks 134, that's expensive. Revolut 75, that's expensive. Boom Supersonic Jets 1.5 billion. I don't know anything about them, but do these guys even make a dime of revenue? Like, because if they don't, I'm not investing in some supersonic jet concept. Not in this market, bro. We need freaking revenue. We need revenue. Silver is down 5%. Nebius down 3%. Iren, that's also still down 5%. Google, are we still going lower? 297, very close to the low of the day at 296. Did Chamath launch his latest SPAC yet? No, he had some like American Exceptionalism Corporation. He did not launch it. However, he did say over the weekend that Warren Buffett's returns were only because of insider trading, which I thought was a hell of a take. But he did not launch his SPAC yet. Leon Cooperman just put out his 13F. The only thing exciting here to look at is the newest position was Rocket Mortgages, RKT. That's down 3% on the day. Leon Cooperman manages $3 billion, Rocket Mortgages. He added to Oxy. He added to ET, Energy Transfer. Steve likes that one. And he sold off some of his banks, but a lot of it's in energy. He also still has 3 million shares of MP Materials, and he has all 1.3 million of Apollo, which is a private equity fund. So the only thing he added that was new was Rocket. Rocket Mortgages. Which Rocket companies? 21 million shares. So I guess he's betting on rates coming down. I mean, that's the only reason you would buy Rocket, right? Only reason you would buy a lot of these names pegged to mortgages. You would imagine the yields are going to come down, mortgages are going to come down, and refinancing is going to explode. We still don't have Buffett's 13F yet. That should happen today. I mean, at this point, we are getting most of them. And so we should see more of them pretty soon. Lee from Maverick Capital. This guy manages $9.3 billion. This guy's a big tech guy. He bought Google, 1 million shares, bought 62% to his TSM, added to Amazon, Nvidia, Microsoft. He bought Applied Materials, bought Boston Scientific, bought Visa, bought Camden Property Trust, added 100% to his Monster. He bought Compass, bought Argan. He sold 50% of his Disney, sold 20% of his Snowflake, sold 34% of Coupang. He sold 35% of Bookings, added 67% to FedEx, bought Netflix, 50,000 shares as well. Trying to see any others that look interesting. He bought Fiverr, bought McDonald's, bought American Airlines. Not massive buys, a couple million each. Bought Abercrombie, bought Costco, bought Deckers, bought Nike. We know Bill Ackman sold Nike, bought United Airlines. A lot of buys in here. He sold Pepsi, sold Altria, sold Mondelez. It looks like he's buying tech and buying certain parts of value and selling off a lot of parts of value. He added 1,000% to Intuit, so this guy's calling BS on the SaaS sell-off. You're seeing a lot more tech buying from some of these people. Green candles, we're bouncing. Are we bouncing? VIX is probably going down. VIX just took a nasty candle down. Okay, Amazon back to 200, Nvidia back to 180, Robinhood back to 75, Palantir back to 130, Apple almost 260, AMD almost 200. S&P, are we at 680? S&P 677. Yeah, he bought 46% added to his Estee Lauder position. Micron, are we over 400? Micron, wow, over 400 from 397. It's just becoming an algorithmic market. We're at 945, we dump. We're closing it on 11, we'll pump. And then probably around 11:30, we dump again. I mean, this is, you can't trust any of these. Like, you literally can't trust any of these to create a trend. If that's how the market's going to be this whole year, then I guess that's how it's going to be. But there's no headline that just came out right now. I can't see any headline at 1050 that is creating a bit of a move. Fear and greed, I think we're still at 33. Celsius down 3%. Fear and greed, yeah, still at 33 on fear. Rocket Lab just went green. Did we go green? Rocket Lab, yeah, look at that. Like, dude, this is getting ridiculous. Rocket Lab why was Rocket Lab at 65 today? I don't know. Why is Rocket Lab now at 67, 63? I don't know. Like, I mean, it's becoming laughable how these algos will take it up or take it down, and they just don't care. They just do not care. Yeah, Molina Healthcare, this is another one of Burry's favorites, down 50% over the past year. Now at 136, their earnings were just not the best, and that one got hit. Why was Rocket Lab at 90 last month? I don't know. Yeah, that's a fair point. I mean, look, in January, I mean, we talked about this. It felt like you could explain why high beta caught a bid, which was the whole sort of small cap effect. I mean, January is when you get a rebound after some of the December consolidation, but it felt a bit ridiculous. Again, I love Rocket Lab. I know a lot of people got mad at me for talking shit about Rocket Lab, but it wasn't about Rocket Lab. It was $99 really for Rocket Lab. Like, that was getting expensive. That was getting expensive. Like, any Rocket Lab bull will tell you that was getting freaking expensive, as cool as it was. D-Wave was hitting $35. Again, the quantum names are cool, but like they were Oklo was getting back to 100. So January felt frothy. It's just the froth didn't leave those names in February. It left everything. Like Oklo and Rocket Lab going down meant that Microsoft and Meta had to go down with it. And that was, I think, the broader issue with how we've seen this decline over the past 2 weeks. And now you got a lot of people wondering, all right, is that enough pain? Like, Rocket Lab at 67 is not the same Rocket Lab at 99. And like, does Rocket Lab need to go down to 40? I don't think so. Like, could it? Of course. Just like Robinhood could go down to 40 as well. But at some point, enough selling becomes enough. And like, you get bidders and buyers that come in and algos that come in and they bid it up. Now, that hasn't been the case with software. I wonder if that's going to be the sort of waterfall decline that we've seen in software with high growth tech, because we haven't actually seen it. Like, seeing what's happening in software to high growth tech means Palantir goes under 100, means Robinhood goes to 40, means Rocket Lab goes to 40, means Tesla goes at least to 350. Like, we have not seen that type of a decline yet. We've seen it in software, and it's really ugly in software. Salesforce still down 3%. I don't know if we see it in high growth tech yet. Amazon still trying to get up to 200. Amid who's going to play you in the next Burry movie. Oh my gosh, bro. Again, for those that didn't see it, I got into a little bit of a public beef with Burry. You can't find it anymore because it deleted all the tweets. But I was just trying to enjoy my weekend. Okay? I was just trying to enjoy my Valentine's Day weekend. And I'm getting blown up on my phone Saturday night because Burry has 2 million followers and he quoted me to his 2 million followers. And then I wake up the next morning and he deleted the tweets. It's just like, dude, what is he like? I really didn't think when I watched The Big Short for the first time that I'd be going back and forth with the guy. And yeah, I guess that's how it played out. But look, if Palantir goes down, he's going to get all the credit. If Palantir goes down, he's going to get all the credit. And I just think if it goes down, the whole market's going down. I really don't think with the earnings and growth they put up that they can't go down. By the way, it wasn't just me, okay? D.A. Davidson came out with a report as well. And D.A. Davidson, which has a 180 target on Palantir, they are neutral. They're not a buy. They're not an overweight. They're neutral. So they're not saying go out and buy it, but they are saying, hey, we do think there is a decent chunk of momentum here. They said, let me pull this up right here. They said we read Michael Burry's shit and we think it's stupid. Let me pull it up right here. They said that, I mean, they were more respectful than me. I didn't even call him a name or anything like that. They said Michael Burry needs a new hobby. We read all 10,000 words in Michael Burry's newsletter and found no new reason to worry about Palantir. So, yeah, it wasn't just me. And they said the exact same thing I said. They said, we agree AI and LLMs are at very early stages. However, Michael Burry is misinterpreting what Palantir does with AI. And like his whole article was like, oh, they don't build an AI LLM. They're not an AI company. And it's like, well, that's the point. D.A. Davidson says, we do not agree this is a problem for Palantir. Quite the contrary. The very reason Palantir is doing so much better than any other software company is that Palantir is the rare company actually helping its clients achieve value from AI and mission critical systems. So yeah, I mean, that was the level of beef over the weekend. But at the end of the day, it's going to be up to the algos. I don't think it's going to be Burry creating some massive short on Palantir. I don't think any influencer can do that. I really do think the algos are either taking these growth stocks up or down. And we're going to see if this ends up playing out. Did you tell them your favorite movie was The Big Short? Big Short's actually one of my favorite movies. And now I have to watch the movie knowing I was beefing with the guy in the movie. Who's the lucky guy who you spent your V-Day with? Davis. He flew out from Vegas and we had a great time. So unfortunately though, we're at dinner on Saturday night and I couldn't focus on him. I had to freaking focus on Burry blowing up my line. But it was a fun weekend. It was a fun weekend. Google still below 300, dude. Goodness gracious. 299.62 on Google. Amazon 200, at least that's getting a bit above it. And then Iran almost below 40, dude. It touched below 40, 39.70, down 4%. Okay, guys, Davis didn't actually come over. That's a joke. It's a joke, okay? I did tell him to come over. I was like, bro, you should come over. You could just chill for the weekend with us. But we did FaceTime a little bit over the weekend. But Davis did not actually come through. I did have a fun weekend, though. I had a fun weekend. And honestly, the Burry stuff didn't even hit me until like yesterday. Because it was a bit distracted over the weekend. And this Burry thing starts blowing up my line on Saturday. At some point, I was just like, bro, I'm not looking at this shit anymore. I don't care. If he wants to say whatever he wants to say, then let him do it. But then he deletes everything. So I'm like, okay, so I guess he didn't actually believe what he was saying. Nvidia trying to get a bounce above 181. Trying to get a bounce above 181. Palantir back to 130.8. CrowdStrike, a little bit of movement. I mean, above 400, got a bounce to 404, but still down 6% right here. Yeah, none of these stocks are really catching a bid to the upside on a bounce. I mean, they're getting a little bit of a move, but all of them are still relatively lower than where they were, even in the pre-markets, which is still pretty ugly. Burry started spamming the link when I said I wouldn't let him touch my money with a 10-foot pole. Dude, he blocked like 50 people. He didn't block me, but he blocked like 50 people over the weekend. And he was like, you're not trying to have civil dialogue. I'm like, dude, what are you talking about? Like, I didn't call you any names, or I respectfully responded to what you said. And then you're blocking people. Like, blocking people is the antithesis of civil dialogue, because you need to be able to like speak to someone. They need to be able to see what you're saying to have a conversation for it to even be civil. And then his last post was like, oh, the only people who can respond to me are the people who subscribe to my Substack. I'm like, you sound like a child, bro. You sound like a kid who just joined Twitter, who's trying to sell Substack subscriptions. And it's like, the only way you can figure out my thoughts is if you subscribe. And it's like, you're better than that. You're so much more respected than that. And I guess he just thinks subscription revenues on Substack is way better than actually managing money and taking a percentage of that, which I agree. Managing money and getting a 2 and 20 is way harder than getting people to pay $400 a year for you to just spew whatever thoughts you have about a topic. But the whole thing was very weird. The whole thing was weird. Did Trump tweet? What did Trump say? Give us something good, Donnie T. Give us something good. Okay, Trump. The federal government is not at all involved with what has taken place inside of the massive sewage spill in DC. But remember, even in that case with the Democrat shutdown, we'll have to bring in true patriots to do the work because many are not working right now. These Democrats caused disasters, both river and shutdown will only get worse. The 2 governors and the mayor of DC must act immediately. This is a radical left environmental hazard with all of their talk about carbon footprints and everything else. They're allowing hundreds of tons of sewage to pour into the mighty Potomac? Is that a river? Making it much less mighty. Act fast. I'm awaiting your call. Thank you for your attention to this matter. When was there a sewage spill in DC? The Potomac River is a river flowing from West Virginia to Maryland. Don't tell me I said that shit wrong, dude. It's literally Potomac. It's Potomac. I'm not saying that shit wrong, dude. But when was there a freaking sewage spill? Oh, wait, it's Potomac. Okay. Why is the POTO a PUH? Again, we need to fundamentally transform the English language. This is becoming stupid. But regardless, the Potomac, it looks like a Potomac. Like, I'm not even trolling. It looks like a pot. Like, I'm not trying to be funny here. It looks like a freaking Potomac. Act fast. Sewage spill. This must have happened over the weekend for him to be tweeting about it, and he must be getting a lot of blame, which is why he's blaming the Democrats here. Sewage spill, Potomac. Yeah, this happened late last night. All right. That's your Trump tweet, blaming the Democrats about a river spill. I don't think it has an impact on the markets, but that's what he's saying. The VA governor is also getting the blame, yeah, based on this tweet from Trump. Palantir, did we go green? We went green. Slightly. Very slightly. Dude, do you guys really look at Potomac and say Potomac? Like, I refuse to believe. And if you've heard the river, if you live in Virginia and you've heard about the river before, okay, you get a pass. But anyone that sees Potomac, no, you don't think, oh, that's a Potomac. Like, and everyone saying that is lying. Like, you're just all lying if you say that. Like, I'm the only one being honest here when it comes to pronouncing words. And it's sad that I'm the only one choosing honesty, but no one sees freaking Potomac off Potomac. It's just not the case. Let's get an update from CNBC, and we'll keep going from there.
So with the volatility index just about 23. So everyone knows this playbook, that this has been how the sell-offs have remained contained. There's been some slippage in the rotational action of the market. However, you still today have the average stock outperforming the S&P. It is largely concentrated tech and speculative weakness. There are actually more new 52-week highs in the New York Stock Exchange so far today than new lows. So this has been the rule for a little while. The question is this really an escape hatch? We are entering a somewhat dicier seasonal window. We have had significant kind of tactical short-term market peaks in 2018 in January and February, 2020, 2022, obviously also 2025. So it seems as if everyone has that on their mind. So far, the market is managing to hang in there just barely.
For a while, Mike, we've been seeing this divergence between chips and software, but then over the last 10 days, that trade isn't working as well, with not only software trading lower, but the semiconductor sector as well under pressure. Nvidia down again. What do you make of that?
It's interesting. Everyone would have looked at those charts of, semis outperformance relative to software and said something has to give here. It's at a vast extreme. What was not, I don't think, anticipated was that maybe both could go down, but software go down less and software not make new lows.
And software continues to make new lows. Now, again, IGV got a lot of momentum on Friday, but software continues to get hit pretty ugly. Bitcoin pumping. Okay, we're going to do the same thing I did yesterday when you guys said Bitcoin was pumping in the chat. I have not looked at Bitcoin. I'm going to look at it in real time with you guys, and let's see if it's actually pumping. It's up. Oh, no, it's actually pumping. Okay, there you go. 66.6 to 66.7. That's a $1,000 candle. There you go. All right. I would say 1,000. Yeah, look at that. Okay, so that's nice. Palantir goes green. Bitcoin's pumping. Robinhood's about to go green. Nvidia trying to get right back to where it was during the day. I mean, maybe it's not a crazy pump, but at least it's something. $1,000 up. Hood at 74.90, that's down 1%. Netflix 76. You are seeing some reversals. Netflix was at almost a 74. Disney goes red after being green. It's not really pumping because it dropped first. Okay, that's fair. Bitcoin was literally right here before it dropped $1,000. So the $1,000 reversal is nice to see, but it's definitely not it's not necessarily a complete reversal. Micron is about to go fully green. I mean, you are seeing some momentum. Experts consider the event in the Potomac to be the largest wastewater spill in U.S. history. Wow. I am just hearing about that news today. Even if it happened last night, it didn't really make the headlines. Nvidia just went green. That's probably why Trump tweeted about it, because it's getting a lot of attention. And that's creating more pain. All right, so are we just playing this game again? Now it's 11 and now we go green. S&P almost at 680. Like, it's becoming a joke at this point. I wonder how long this lasts before they hit us with another red candle and we go back down. The VIX, let me check the VIX. The VIX should be down substantially if we're getting this type of a pump. Yeah, look at the VIX. 2165 down from 2294. That's a hell of a move down. That should... If that stays suppressed, we should be going higher at least for another hour before this thing gets hit harder. Or maybe that was the top of the day on the VIX, and now we go up. ETH just went green. Palantir just went green. Rocket Lab just went green. DHS spokesperson Tricia McLaughlin to leave Trump administration. Huh. That's actually interesting, because remember, the DHS funding is part of the reason the government could get shut down again. So it looks like one of their spokespersons is leaving the administration. Okay, I guess we'll see what ends up happening with the funding bill. I think there's going to be a vote on that in the coming days. Nvidia back to 183. Visa's up 2%. S&P at 680. Let's see if we can get above 681, see if there's actually some juice, or 682.80 would be the level that I think would make this feel more real than not. That was the pre-market highs. Dude, okay. I don't know how to say that name, so I said it how it sounds like. I'm probably saying it wrong, but it's whatever. It looks like McLaughlin. Now, you guys are saying it's McLaughlin. That makes sense. That makes a lot of sense. But I didn't say McLaughlin to troll. I genuinely did not know how to say that. But I've seen that word before. I've seen that name before. And obviously, I know it's not literally McLaughlin. But on the top of my head, as I'm speaking fast, I didn't know what to call it. I definitely wasn't going to say Lachlan. I didn't have that type of brain cell to come up with that. So I said McLaughlin. But I'm not trying to troll. That's literally just what it looks like. McLaughlin. So I say words the way they sound. That's how I talk. I don't know why the world has to be the opposite of that, but that's how I say it. All right, what do we buy, bro? Is anything going up or is this all fake? Google back above 300. Hood needs to get above 76. Meta needs to break 640. Put in the chat if you bought anything today or if you sold anything today. SoFi 1954. By the way, a lot of people have been asking about my year-to-date. Year-to-date is 15.8% down. 15.8% down. You guys can do the year-to-date in the chats if you want. I'm down to start the year. And I think many other people are. But for me, 15.8% down. It's obviously ugly. I would like to reverse it. It would be nice to not be down 15% after being up 60% last year. But quite frankly, I'm kind of happy it's only 15% because I feel like without the hood hedge, it would have been a lot worse. So, we got a long year. Hopefully we can reverse it. But I'm negative 15 right now. That is my year to date. And we're going to have to see over the coming weeks if this is actually the bottom for the growth tech sell-off or if this shit gets worse. And if it does, then we're going to have to make some adjustments. Okay, I see 17% down, 14% down, 9.3% down. June's down 2. AU is down 22. Bubbles in the tub. That's a hell of a username. Down 27. Jay's down 45. Kyle's down 2. Oracle's down 12. Deep's down 7. I think the majority of you guys are kind of in the same range as me. 10 to 20% down is what I'm seeing the most. For those that are green, congrats. Obviously, you either hedged correctly or got out of some of the growth names. Benny's down 20%. Someone said, I just haven't looked at it. That's fair. Undad Feeded is up 70% thanks to CVNS. Congratulations on that. Part of the reason that some people are green this year is because, okay, so CNVS is a $60 million stock. So obviously you got into a small cap that ended up working out for you. If you're green year to date, then probably some of the names you're in, well, they probably were contrarian picks, like a Micron or a SanDisk. Contrarian in the fact that they ran up so much that people thought they wouldn't run, or you were just in something that was super small and, like an Ondas, you were in at $3 and it ends up going to $10, even though it's down from 15, you're still up triple on the position, and that's making your year. I think this could be one of those years where one or two names might make the entire year for you if the entire market takes a crap, because that means, one or two things is going to be responsible for the majority of the outperformance. Obviously, if you're heavily in Bitcoin, that's also messing up the year. Michael's down 11.5. Lewis is down 2. Luke is down 12. Brad's down 0.9. Trading Wicks down 26. Yeah, I'm seeing a lot of negative 10 to negative 20% as the average. S&P is about to go green, though. S&P 40 cents away from breaking 682. That would be green for the day. It seems like the majority of us are in that down 10. That kind of makes sense. Down 15%, it seems like the average. Again, I'm 15.8% down right now. I think that is making sense given where December ended. Like, again, all-time highs, S&P just flipped green, was really October 9th for a lot of people. Then we had a pretty ugly drawdown. But most people still ended pretty damn green by the end of December. Like, if you bought anything in April in 2025, it was almost impossible to not end up like above 20% year to date and beat the S&P. The S&P hasn't been moving. I mean, it's been moving down, down 1 or 2%, not that crazy. But the biggest names of the S&P have taken a massive hit. And unfortunately, that's what a lot of the names that people are invested in, Meta, Amazon, Microsoft, et cetera. And then if those names take a hit, then obviously the Hood, the Pounters, the Rocket Labs are going to take a hit as well. So, if you got into Bloom Energy at the end of December, you're doing pretty damn well, even if Bloom is down from the highs. But it kind of had to be allocated to some of those names that, even with the drawdown in growth tech, are still doing very well. And there are those names out there, but just a lot of names have got hit pretty bad. Okay, so S&P goes green. Now, are we keeping this or are we giving it back? 682, we touched it again. So we went all the way down to 675, back to 682. That obviously feels like a little bit of a reversal. Fear and greed's at 34, up from 33. I want to do a poll in the chat right here and see if you guys think that this is real. By the way, the other poll I did, what was the other poll I did? It was, are you buying the IPO funds? 53% of you said no, you're not buying the Robinhood Ventures IPO thing. So, or sorry, no, that was the one before that, the tariffs one. 53% of you said the tariffs will make stocks go down. 47% say stocks go up. So kind of 50-50 on the tariff decision based on what you guys think. All right. Is this reversal real? Yes or no? What do we think? We will have Technical Tuesday today. We will have a real Technical Tuesday. Probably good 3.5 hours today. I know last week was a little quick, but today we'll have a much larger one. And again, Jason's core level, 670. We lose 670, things get ugly. If we can maintain above 680, things have a shot of like actually V-shaping. So he's not bearish, but he's not super bullish. And I think that's the market right now, right? Like it's basically stuck in this choppy range. And until certain levels get breached up or down, it's hard to be bullish or bearish entirely. 682.40. I mean, you get to 683, that would be really nice to see. Obviously, 685 would be a very nice, that would be the Thursday highs, or close to the Thursday highs, 686. Rocket Lab, 69.29. Look at that. That's up 2.7. It's almost like this morning never happened. Yeah. If we end up getting that reversal. Is Trump speaking today? Is Trump going live? I don't know if he's going live today. He was live yesterday on Air Force One. I mean, he said a couple things about Cuba and China, nothing too crazy. BlackRock to keep 18% of staking fees generated by new staked Ethereum ETF. Okay, so it looks like BlackRock is getting more heavily into the ETH staking game. Ethereum 1987. Yeah, SCOTUS opinions we could get this Friday, but it seems a bit unlikely. Well, I shouldn't say it's unlikely. It's just every time they say they're going to give an opinion, they end up ruling about like free speech inside of like a grocery store, which is really important because like, you know, the right to talk freely in a grocery store matters, but like the tariffs also are kind of important. And they end up just conveniently leaving out that opinion every time they give an opinion. We don't have any other 13Fs. I'm trying to see if there's any good ones. Ethereum 1980. Coins up 3.5. Coinbase had a good earnings, but they lost a lot more money than expected because I think the street got too optimistic. I mean, the same thing with Hood. They got a little too optimistic on revenue. And obviously, as Bitcoin fell, Coinbase fell. Nvidia, 184. I mean, 179 to 184. Does that feel fake or does that feel like we got something here? Does that feel like we got something here? VIX has got to keep going down, right? VIX has got to be at like 20, either below 21 at this point or, yeah, below 21. VIX complete reversal. It was up 10%. It was up 12%. Now it's only up 1.7. If that VIX can stay lower, we should be able to have a relatively at least calm day for the rest of the day, if not fully green day. Constellation has earnings today. Let me see. So today after the bell, we have Cadence, Constellation, Palo Alto, and Nano Nuclear Energy. This one is also down about 0.69. Iranians said they would come back in the next 2 weeks with detailed proposals to address some of the open gaps in our conversations with the U.S., as per a U.S. official. Okay. That's good news. That's more diplomacy geopolitically. SPY still green, little red candle, but holding 682. Yes, we're going to have Technical Tuesday today. And we will get into all this stuff. Maybe that is why the VIX is cooling, to be honest. Yeah, Constellation is not today. Constellation is not today. It should be this week though. That's CEG. It's a big energy company. They signed a massive deal with Meta. Constellation's up 5% right there. Last year, the stock year to date is down 16. So they haven't been a beneficiary of energy. But it is up 5% on the day. On the poll, 57% of you said this reversal is not real. So decent chunk of you not really believing it here. I don't think we get any more macro data today. Software stocks continuing to get hit. Service now, even with the new insider buy. Wow, it goes red. I mean, it already was red, but 105 on service now completely gave away the pump. Got up to 103 when we were really feeling it about 20 minutes ago. Even after the CEO said he was going to buy more shares. Fintech is green. SoFi goes green. Hood went green. PayPal went green. Coinbase went green. What's the other one? Affirm goes green. Okay. Well, that's good. You're seeing sectors themselves go green. You're seeing the index go green. You're seeing the VIX go down. You're seeing the largest company in the world hit highs of day. Maybe this is an okay day. Maybe. Okay, let's see what other headlines we have. We talked a lot about the Capex stuff today. The job reversals as of last week. I think the market kind of priced that into the futures. And we're seeing a little reversal right here. U.S. national debt is expected to go up $2.4 trillion every year for the next 10 years, according to the CBO. That means by 2036, we will have $64 trillion in debt, which means theoretically, right, we should be buying Bitcoin, right? That's the answer to this. But maybe that means gold will go even higher. By the way, JP Morgan said, we think gold tops out at 6,200. They said, we like gold, but we think it tops out at 6,200, which is a lot of upside from here. But they think gold is going to take a bit of a hit. Take a look at this chart right here. Bank of America's update on credit card spending shows that the week through February 7th normalized a bit from the big swings that you had weeks ago. Clothing, Americans are spending the most amount of money on, 8.4% growth. Electronics, 5.4%. General merchandise up 6.5%. Bars and restaurants were up 3.5% in terms of what people spent on their credit card. So you're seeing some of these like traditional consumers that go out and like kind of have disposable income to spend on a night out. You're seeing that actually gain more momentum. Gasoline and home improvement actually went down, which makes sense because some of those gas prices are also coming down. But although retail sales were flat in December, which was shocking because we had Christmas, you are seeing credit card sales kind of be on the side of people that are spending more generically versus out of necessity. SoFi right there, 1963 that's great. Nvidia will go to 168 a share. It's called the 200-day moving average. Look, Nvidia got pretty damn close 2 weeks ago to getting there. Maybe it goes there again. I just wonder when Jensen puts up almost 70 billion in revenue and guides for 73 billion in revenue, will the streets sell it off to that extent? And we know, here's the thing, if Nvidia goes down, everything goes down. Like, it's just, it's too big a deal of the market. Now, maybe the value stocks will get even a higher bid, but if Nvidia goes down, all of growth is going to take a nasty hit. The S&P obviously is going to take a hit. And so even if you don't own Nvidia, the only way to protect yourself in it, if you think Nvidia is going down, is to buy puts on Nvidia. Because otherwise, if you own anything else in growth, it's probably going to get hammered with it. Now, maybe it's going to be a very quick decline, like what we saw in November. But it definitely is possible. S&P right there, 682.43. I purchased 3,000 shares of Nvidia in 2022. Friday was the first time I've added to that position since then. Jensen is telling you the future and how much money will be generated. Yeah, look, again, when you hear Dario on that Anthropic podcast, it's really, really hard to not be bullish on the amount of compute that's being spent, and the fact that a lot of that's simply going to be going to the hyperscalers. Here's what he said right here. This was another good clip. He predicts AI revenue is going to reach trillions by 2030.
The stepping back, the thing I'm trying to get at is more like, it seems like your worldview is compatible with somebody who says, we're like 10 years away from a world in which like we're generating trillions of dollars. That's just not my view. Yeah, that is not my view. Like so I'll make another prediction. It is hard for me to see that there won't be trillions of dollars in revenue before 2030. I can construct a plausible world. It takes maybe 3 years. So that would be the end of what I think it's plausible. Like in 2028, we get the real country of geniuses in a data center. The revenue's been going into the maybe is in the low hundreds of billions by 2028. And then the country of geniuses accelerates it to trillions, and we're basically on the slow end of diffusion. It takes 2 years to get to the trillions. That would be the world where it takes until 2030.
2030 is not that far away. You're talking about less than 4 years for trillions of dollars in revenue. Again, big tech is already putting up collectively, what is it, about $1 trillion, right? In revenue? Yeah, Amazon's like 500 billion. Yeah, when you add it up, I mean, it gets to $1 trillion in revenue collectively between them. In 4 years, if they keep compounding at this rate, if not even at like, low double digits, high single digits, you're going to, and theoretically you would, AWS is growing at 24%, Azure is growing at 40%. You would expect it to stay at least in the high double digits, close to 20%. You're going to get to trillions in revenue. And at that point, these prices are going to look like a joke 4 years from now. Unless it all collapses and it's all fake. And if you think it's not, then you'd imagine that revenue will be rewarded to a lot of these companies that are actually trying to capitalize on the opportunity. Would you please interview Dario? I would love to. I love how he talks, bro. He's like constantly looking around. He's like stuttering on his words. You can see his mind is moving faster than he speaks. But when he speaks, I love his interviews because he's like a very pragmatic but optimistic approach on overall AI growth. Now, he is very doomeristic about the jobs, which I don't blame him for that because obviously there's probably going to be some disruption there. But dude, I would love to interview that guy. That'd be super fun. Sounds familiar. Yeah, it would be kind of fun to go back and forth with him. All right, I think that's pretty much it for the day. I'm leaving you guys with a green S&P. Hopefully when I come back, we are still green. The major headlines had to do with the housing index. Market didn't care too much. 13Fs are out, but they're not as substantial yet. SoftBank sold Nvidia. The Saudis sold Take-Two. AMD bought a couple companies, nothing too serious. CFTC released a statement. I mean, you're not seeing crazy headlines. The VIX spiked. Now the VIX is dumping. The biggest headline of the day was the Iranian official signaling diplomacy is very possible with the U.S. And as a result of that, I think volatility died down. You're starting to see these stocks go green. Hopefully they can hold on to some of that momentum by the end of the day. And then in a couple of weeks, we got Nvidia earnings. And I guess that'll determine where everything else goes. Did Berkshire sell UNH or did they buy more? Honestly, we should find out today after the bell. I think today is the final day for 13Fs to come out. So before Technical Tuesday, we should be able to get a decent amount of these 13Fs, and then we'll go over what Berkshire and Stanley Druckenmiller and Bill Ackman did, all that stuff. But yeah, we should have some of those answers very soon. Will you be live for the Robinhood Roadshow? I will not be live for that. I'll take a look at it on my phone. I think it's going to be on the phone in the Robinhood app. They're going to be doing that roadshow. I'm curious to see how they justify some of these companies and their valuations, but again, I've kind of just decided I really don't want to buy into them. So, but we'll see what they say. All right, word of the day. What do we got other than Potomac? Look, maybe I did miss 5th grade social studies class, but it really looked like Potomac. It really did look like that. Okay, I don't know how to say this word. Halcyon denoting a period of time in the past that was idyllic-y. I don't even know how to say that word. Happy and peaceful. People always look back at the halcyon days of a bull market, forgetting how uncertain it felt at the time. Again, I love how ChatGPT literally incorporates the stock market in these sentences. All right, how do you say this word? Halcyon?
Halcyon.
Okay, it's not that far off from what I was saying. How do you say this other word, though? Idyllic-y? Why are they using a big word in the definition of the word? Idyllic-y? Look, even Google doesn't have the freaking... Hold on, do you have the pronunciation thing? I have to use a different website. Google doesn't have it. Okay, this is how you say it.
Idyllically.
Why'd she say it like that, bro? It's not Valentine's Day anymore. Goodness. All right, idyllically. What does this mean? What does this word mean? It means peaceful, pleasant, and charming. Peaceful, pleasant, and charming. There you go. All right, so that's our word of the day. Halcyon, denoting a period of time where things were peaceful. Hopefully we get back to that. Again, a lot of these growth stocks have taken a pretty ugly hit. Fears of Capex, fears of the SaaS sell-off, fears of lack of earnings growth. All of those fears seem to be a bit more irrational than not, but the volatility is very real. And we've been seeing a choppy market go back and forth with volatility taking these stocks up and down literally every day. Hopefully we break the trend. And if we can break the trend, maybe we can get some more momentum. And as I say, we can break the trend, the S&P goes red. What just happened, bro? Look at that red. That's an ugly red candle right there. The VIX probably just spiked with it, right? Let's check the VIX. The VIX just spiked back above 21. Why not? Why not? This is ridiculous, dude. I'm sorry, guys. This is actually, I can't do anything about this. I cannot do anything about this, but this is why it's just a little tough to navigate the environment. And if you buy something, you really got to have a long-term view, because if you're buying it for the day, unless you have your levels to understand how to trade it, like it might go against you as quick as it was going for you. The halcyon days of 11:20. Yeah. The freaking halcyon days of 10 minutes before this got hit. All right. It is what it is. I'll be back on the close. Hopefully it's a little bit better, but that's what we got right now. We'll be having Technical Tuesday later today. We'll get some more earnings. We'll see if this stuff reverses, but this is the state of these markets. These are the states of these markets, and it looks like this is how things are going to be for a little bit longer. All right, guys. Thank you all for being here. Hopefully everyone had a great weekend. Happy to be back, and we'll be live for the market close. All right, everybody. Have a good one.